Most people try to make money from Bitcoin in one way. They buy it, they hold it, and they hope that the price goes up. And I call this the buy and hope strategy. And look, sometimes, yeah, it works, but it also means your entire plan depends on just one thing, the price of Bitcoin. And if Bitcoin goes up, you feel smart. If Bitcoin goes sideways, nothing really happens. But if Bitcoin drops, then you sit there waiting. But Bitcoin mining is different because instead of only buying Bitcoin, you produce it every single day, automatically, through machines that help secure the Bitcoin network. And this can be very profitable if you do it the right way. And that is what this video is about. This is easily the most valuable video I've ever made on Bitcoin mining. From start to finish, I'm going to walk you through the entire model, how it works, why it works, what the numbers look like, what the risks are, and how you can leverage it yourself even if you do not have any technical know-how. But before I explain the system, I want to show you why you should listen. At Epic Mining, we currently manage over 80,000 Bitcoin mining machines for more than 850 investors worldwide, individuals, companies, and investment funds. And here you see me at our previous Bitcoin mining summit with hundreds of investors from all around the world. These are people who own real machines inside real mining facilities, producing real Bitcoin every single day. One of our clients, Eric, started with just 5 machines, then he scaled to 25 machines, then 300 machines, and today his machines produce around $2,000 per day automatically. And Eric is not a rare exception. I have a folder full of Bitcoin mining dashboards and client results. And every day we get new results from clients earning serious money with the exact model that I'm going to explain in this exact video. And this is exactly why I believe Bitcoin mining is so misunderstood. Most people think Bitcoin is only something you buy, but the people who understand infrastructure, these machines, understand that there's another way. You can produce it, you can earn it, you can build real cash flow from it, without trading, without staring at the charts, without trying to time the market, and without needing to become technical. Now, I want to tell you something personal for a moment, because I think it matters. I sold 3 companies before I was 30. I started my career in Silicon Valley managing a team of around 40 engineers. I built companies from 0 to 7 and 8 figures. I've lived between Bali and Dubai. I've traveled the world and I built my dream houses in Bali and Dubai while running businesses remotely. But the point was never just money. The point was freedom. Owning my time, choosing where I live, choosing what I work on, choosing who I spend my days with. And that is exactly why I became obsessed with Bitcoin mining. Because when it is done correctly, it is one of the most automated and scalable income streams that I've ever found. Every single month, I personally buy more mining machines. Not because I have to, but because I have done the math. And I know which side of this industry I want to be on. And this video is especially for 2 types of people. Type number 1 is you already have capital, you're earning well, but your money is sitting in a savings account or a portfolio that is not working nearly as hard as it could be. And deep down, you know that it could be earning more. And then there is type 2. You're curious about Bitcoin. Maybe you already own some, maybe you do not. But you've never seriously considered that you can produce Bitcoin automatically below market price every single day without trading, without guessing, without technical knowledge. If that sounds like you, then this video was made for you. Over the past 6 years, I've flown all around the world building Bitcoin mining operations in multiple countries: Kazakhstan, Siberia, Ethiopia, Finland. And after all those years, I believe that we have found the best mining setups available today. So in this video, I'm going to show you exactly how it works, how Bitcoin mining actually generates income, and why location and energy prices matter so much. We're also going to discuss what kind of returns investors are looking for, what can go wrong, how to avoid the biggest mistakes, and how you can get started in as little as 7 to 10 days without technical knowledge, without prior experience, and without touching a machine yourself. Now, let's get into it. Okay, I'm pulling up my screen here on my laptop, and I want to walk you through this 𝗗𝗶𝘀𝗰𝗋 presentation that I've created for you. So the first chapter of this video is a quick introduction and the mindset that you need to become a successful Bitcoin miner. So we briefly touched upon this in the introduction of this video, but first of all, let's discuss who am I and why should you even listen to me. So my name is 𝗗𝗶𝘀𝗰𝗋. Welcome to my channel here on YouTube. And I have actually built multiple 7 and 8 figure companies in the online education space, in the e-commerce space, and a marketing agency, and a bunch of spin-off companies, which I have successfully exited before the age of 28. Now, for the past 6 years, I have been active as the founder of a company called Epic Mining. At Epic Mining, we make Bitcoin mining easy, accessible, and profitable for investors worldwide. So here you see me speaking at our latest Investors Summit, where we invited hundreds of investors from all around the world to learn more about Bitcoin mining. So here you see pictures of me with some of our clients at Epic Mining. Here you see they're holding actual Bitcoin mining machines, just like the one next to me, all right? These are the machines that are actually the backbone of Bitcoin. They are actually the reason why Bitcoin even exists. And in this video, we're going to dive more into the dynamics of, why these machines are so crucial for the existence of Bitcoin and how they produce real income. So we've helped more than 850 clients from all around the world, not just individuals. Of course, we have a lot of, average people, just like you and me, people with a job or a business that have some extra savings that want to deploy it in some kind of investment that outperforms traditional investments like stocks, real estate. And yeah, they found crypto mining or Bitcoin mining specifically as a very interesting strategy. And that's why they decided to start mining Bitcoin too. And in this video, we're going to share how you can also get into mining. So here you see a picture of me in one of our mining facilities. This mining facility happens to be in Ethiopia. We've got multiple locations across the world. We're going to touch upon that later in this video. But I just want to show you that whatever I am sharing in this video today, I'm actually practicing what I'm preaching, okay? I'm in the trenches every single day. And I've been so for the past 6 years, learning about Bitcoin mining, improving my knowledge, talking to insiders in the industry, helping other people to get started with mining. And all of those learnings are condensed in this video that you are watching right now. Here you see another picture of me in a new mining facility, which is being built out. This picture was actually taken 3 years ago when we were building a big mining operation in Ethiopia. This operation was scheduled to have around 50,000 mining machines. And these two guys that you see left and right of me are Koen and Jaro. They are some of the most well-known podcasters in the Netherlands and Belgium. So I'm originally from the Netherlands, if you're wondering by my accent. And I invited these guys to come along with me. So their entire journey of visiting the mining facility is on their YouTube channel as well. So everything that I've done in the past 6 years is very well documented and visible on the internet, okay? Nothing disappears from the internet, and I've made sure that, everything that I say, that I do, that there's trails out there on the internet that people can verify that I'm actually doing this, and I've been doing this for a very long time. So I've got more than 6 years of experience building mining operations across the globe. I started in Kazakhstan. I built mining facilities in Siberia, Ethiopia, USA, Finland, and we still have a couple of more locations in the pipeline where we're going to build out mining facilities. Our newest farm is actually in Finland, where we have one of the best mining setups that I've seen in the past 6 years. So here's a picture of me in the snow. Here's a picture of me inside actually my first farm in Kazakhstan more than 6 years ago. And here is our latest farm in Finland again. So here you see a very big difference between how this first site was looking versus how the site is looking right now. Big difference, big jump in quality. All of that was possible due to all of the lessons that we've learned in the past couple of years. So why Bitcoin mining is one of the most profitable business models on earth right now. So whenever I go out on the street and I talk to a random person, either in a cafe or a restaurant or a networking event, and I tell people that I mine Bitcoin, they often ask me like, hey, is it still interesting? Like, is it still profitable? Didn't we miss the boat already? Wasn't this just for people who are super technical, that have special government connections, or that are in the crypto space for more than 15 years since its inception? And the answer is no, okay? All of that is not needed. Average people like you and me are earning a lot of money every single day with these machines if you know how to do it the right way. And actually, in fact, Bitcoin miners are making between $30 to $60 million per day. $30 to $60 million per day. And they're generating roughly $1 billion of income every single month. All right. And that number is only growing over time. So annual Bitcoin miner revenue, we've seen a big spike in 2021. Unfortunately, I don't have the numbers of 2025. Yeah, they're growing and growing and growing because Bitcoin is growing in value. Okay, we went from $1 to $10 to $100 to $1,000 to $10,000, $100,000, and Bitcoin, if you ask me, and if you listen to many of the analysts in the industry, many people believe that Bitcoin can grow to over $1 million per Bitcoin in the next couple of years, let's say in the next 10 years. Okay, if you want to learn more about the reasoning behind that, go and watch Michael Saylor, for example. Michael Saylor, the founder of a company called MicroStrategy. Now they're known as Strategy. They're one of the biggest Bitcoin treasury companies. They're doing a lot of research. They're talking to a lot of really wealthy investors and industry insiders. And they actually have a lot of really credible proof and arguments to reason why Bitcoin might grow to over $1 million per Bitcoin in the next couple of years. And the more Bitcoin is worth, the more miners are actually earning. So we spoke about Strategy, which is a massive player in the Bitcoin space. Let me know in the comments below if you guys have heard of Michael Saylor and Strategy. I believe he's such an interesting guy to keep an eye on, to learn from. Definitely one of the smartest people in the space. But then we also have BlackRock. Okay, BlackRock is actually the largest asset manager in the world. They're managing over $11.5 trillion of assets. Okay, that's 11 with 12 zeros behind it. Okay, a trillion has 12 zeros behind it. That's a massive amount. Okay, that is the amount of wealth that most people can't even comprehend with their brain, with their experiences. Like, this is an insane amount of wealth that they're managing. So BlackRock is basically managing very large portfolios for some of the wealthiest players in the industry. And BlackRock is known as the company that owns the world. Okay, they own shares in practically every single company and practically every asset class. They're dominating. Okay, and I believe that one of the easiest ways to spot profitable trends before the masses catch on to those trends is to study what the smart money is doing. Okay, and there is no smarter money in this space than BlackRock. And what is BlackRock doing? Well, BlackRock has recently invested more than $400 million in 4 out of the 5 largest Bitcoin mining companies. And if you ask me what that says about this industry, that the smartest money managers are positioning themselves in Bitcoin mining, do you believe that this industry is going to skyrocket? Do you believe that there's a lot of money to be made? Otherwise, why would they be positioning themselves in this industry? Okay, again, Bitcoin miners are earning between $30 to $60 million per day. This is publicly verifiable information. Just type in on Google Bitcoin miner revenue and you'll see a chart showing that in the past 6 months, miners made somewhere between $30 to $60 million per day, meaning an average of around $1 billion per month. And some of the smartest money managers are now positioning themselves in this space because they understand that there's a lot of money to be made. So who is this for? It's for anyone, of course, but I want to be a little bit more specifically. You do not need to have any technical skills, okay? When I discovered Bitcoin mining 7 years ago, I figured that I needed to be super technical, so I opened my laptop and I started binge watching YouTube videos on how to get started with Bitcoin mining. But those videos weren't like the video that you are watching right now. Those videos were super technical with engineers talking about their own mining setups, which they've built in their basements or their attics, talking about their home-written software, which they've written to overclock the machines and their own cooling systems that they've created. And honestly, it felt to me as if they were speaking some kind of alien language. All of the technical jargon that they were throwing at me, I couldn't follow it, okay? Now, my mission is to make Bitcoin mining easy, accessible, and profitable for the average person, okay? Not a super technical coder, not a billionaire with government connections, no, for the average person. And that is what this video is about. So don't worry, you do not need to have any technical skills. Anything that you need to know will be covered in this video. So you also don't need to have any prior experience in mining Bitcoin. This is the full guide of everything that you need to know. Everything is in this video so that you can get started with Bitcoin mining, let's say in the next 7 to 10 days from now. I know it's a big, bold promise, but I'm going to show you how to actually make it a reality. So who is this video not for? Okay, this video is not for you if you're unwilling to follow the system explained in this video. I get it, okay? I get it. Some people, they always try to innovate. They try to listen to 100 different YouTube videos and take one small nugget from each YouTube video, and then they try to implement it themselves, and they run into a massive wall, and they're not making any progress. They're getting frustrated. They're spending hours and days into researching. Look, everything that you need to know, again, I'm emphasizing it, will be covered in this video. Just watch it from the start until the end, and you know everything to get started with Bitcoin mining. You don't need to watch any other videos. This will be the final video that you'll ever have to watch on the topic of Bitcoin mining so that you can understand it. Now, this video is also not for you if you're simply looking for some kind of silver bullet, some kind of get-rich-quick scheme, because that is not what Bitcoin mining is, okay? Bitcoin mining is a serious strategy to build wealth long-term, okay? We're not talking about you buy a machine and you get rich tomorrow. Hell no, that's not how investing works. And if anyone ever promises you that, run, okay? Run. Because oftentimes that's a major red flag. Investing takes time. These mining machines, they have a typical lifetime of 4, 5, 6 years, depending on the conditions under which they're maintained. Now, during those 4, 5, 6 years, that is the typical economic lifetime of the machine during which you're going to be generating your ROI. So if you're not willing to at least hold on to your Bitcoin for 4 years because you simply just want to put your money into fartcoin and hope to get rich tomorrow, leave this video, okay? But if you're willing to stick to a strategy for the next 4, 5, 6 years, then this video is for you. Okay, so let's talk about mindset. All right, in the world of investing, there are 2 types of people. It sounds very blunt, but it is the truth. It is the truth. Number 1 is dumb money, okay? What does dumb money do? Dumb money, they buy late, they buy the hype, and they sell when the market crashes, and they panic sell everything. So they basically buy high, sell low, and then they lose a lot of money. So what are some typical examples of dumb money behavior? So they buy Bitcoin at the peak because they believe it's only going to go up, it's only going to go to the moon, all right? Then when Bitcoin corrects down, they start to freak out. They believe, oh no, Bitcoin is going to go to 10,000, it's going to go to 0. I'm hearing stories on the internet about quantum computers. I'm hearing stories that China is banning Bitcoin. I'm hearing all of these negative stories and newspaper headlines. Well, that is a system designed to make you scared. And if you fall for that system and you actually sell your Bitcoin during those phases, yeah, then you're selling at the worst possible time. And look, I have been there. My first Bitcoin cycle, I have sold the bottoms because I thought Bitcoin was going to crash even further. And I didn't understand what I was investing in. So yeah, when you don't understand what you're investing in, you're only in it to get rich quick, then that's the formula to basically lose a lot of money. They're jumping into coins and tokens because influencers promote them. Do you know those YouTubers that only shield projects, those Instagram influencers that are pumping projects and at the same time they're dumping their own allocations? Or those KOLs on X, which behind the scenes you can literally just pay them a couple of thousand and they'll talk about your project and shill it to their audience. That is a whole system created and it's rigged against you. All right, and dumb money follows that system. Another typical scenario where dumb money kind of showed itself in large volumes was the GameStop short squeeze. Okay, all these retail investors, they jumped on this stock called GameStop, literally just out of FOMO, fear of missing out. Now, what is smart money doing? Smart money does the opposite of what the masses, the dumb money, is doing. Okay, so they buy early based on data. They're completely data driven. They completely disconnect their emotions from whatever they're doing. And they sell into the hype. So when the market goes up, they sell into the hype rather than buying into the top, what dumb money is doing. So what is some typical behavior of smart money? So they invest in Bitcoin mining operations. They buy cheap hardware during the bear markets. They position themselves in locations with cheap electricity, and they have a long-term view, okay? They're willing to ride out the investment for 4, 5, 6 years in order to maximize their ROI. They also invest in infrastructure, okay? Infrastructure, that's such an important word that we're going to be re-emphasizing in this video time and time again, because it's really great to buy and sell Bitcoin. But what if you could take a small percentage of every single transaction happening on the network completely automated? Wouldn't that be nice? Hit the like button if you think that would be nice, because that's exactly what we are going to be covering in this video here. Another example of smart money moves is, do you remember during COVID when the crypto market crashed, when Bitcoin dropped, I think, to $3,000, $4,000 per Bitcoin, and people were panicking. They thought the world was ending, that Bitcoin was never going to recover. But smart money accumulated then, okay? That is when they gobbled up lots of Bitcoin at very cheap prices, and it made them generational wealth. Now, when all of YouTube is telling you that Bitcoin is going to go up higher and higher and it's never going to stop increasing, and all of these influencers with their crazy price targets, that is the time to sell. That is when smart money takes profits. And retail investors, dumb money, they actually buy into that. So they buy and buy and buy, even at the top prices in the market, all right? So a big difference between dumb money and smart money, all right? Look, investing is a journey. Most people, they invest based on their emotions, fear, greed. But if you want to become successful as an investor over the long term, it's really important for you to decouple your emotions from your actions, all right? Because investing purely based on emotions is going to completely wreck your portfolio. And I don't want you to lose money, all right? That's why we need to say goodbye to our emotions, and we need to start looking at the data. We need to start educating ourselves. We need to learn a proven strategy to accumulate Bitcoin and to grow your wealth over the long term. And that is exactly what the smart money in the market is doing and what we're going to be covering in this video today. Now again, one of the beliefs about Bitcoin mining is that we've already missed the boat, that Bitcoin mining at home isn't profitable anymore. And yeah, I do believe, and I'm pretty certain, and the data shows that Bitcoin mining at home isn't profitable anymore. Does that mean that Bitcoin mining isn't profitable at all, or that it is not possible anymore to mine Bitcoin as a normal person? The answer is no. Because most people approach Bitcoin mining with the mindset of 15 years ago, when you could simply download a script on your computer and that script would mine Bitcoin for you. No special equipment needed. It was super easy, super simple. And most people still approach Bitcoin in that way. But the market has evolved. The world has evolved. Bitcoin has evolved. So here is this quote by Charles Darwin. And I really, truly, strongly believe in the evolution theory. And not only in biology, but in every single thing in our world. You know, the evolution theory is so important. So if you believe that Bitcoin mining isn't possible anymore, then you don't understand Charles Darwin's evolution theory. Because Charles Darwin says it is not the strongest of the species that survives, nor the most intelligent that survives. It is the one that is most adaptable to change. Now, why did I leave this quote here, or why did I drop this quote here in this video? Well, very simple. If you believe that Bitcoin mining is not profitable anymore because home mining is not profitable anymore, does it mean that Bitcoin mining isn't possible anymore? No, it means that you need to evolve, you need to change, you need to adapt to a changing environment. And Bitcoin miners that have adapted to a changing environment are still making a lot of money. Remember, we just discussed that Bitcoin miners are currently making between $30 to $60 million per day with these machines. Yeah, they have figured out a way to do it. And the way to do it is, well, we're going to cover that in just a little bit. So stick here with me with this cliffhanger. I quickly want to touch on my personal journey. So I tried mining Bitcoin in multiple countries for the past 6 years, and I learned what truly matters. All right? What truly matters is not just cheap electricity. Sure, you can go to Paraguay and get cheap energy, or you can go to Bolivia, or you can go to some African country and get cheap electricity. But that is not what Bitcoin mining or successful Bitcoin mining is all about. Because if you're only looking at cheap electricity, I hate to disappoint you, but you're going to run into a lot of walls. It's about the complete picture. There's multiple components that you need in order to mine Bitcoin in a profitable way over the long term. So let's get back to this quote. Bitcoin mining at home is not profitable anymore. So what is the way that Bitcoin mining is profitable and how miners are still doing it? It's by mining in a collective, okay? In a collective, by pooling the resources together, by buying machines in bulk, by negotiating the best possible energy agreements. And that is what we do with Epic Mining, my company that I've been running for the past 6 years. We're currently managing 80,000 mining machines, and we are a Bitcoin mining collective, meaning that 850 plus individuals came together under Epic Mining, all mining Bitcoin together, driving the prices of machines lower, negotiating even lower energy rates. And ultimately that creates a massive win-win, because the lower the cost, the bigger the returns for everyone. And that is why mining is still possible. And here are some of the important components that you need. So you need, of course, reliable energy. Okay, you need cheap, reliable, stable energy. Unfortunately, I can't play this video here, but this is a video of our substation in Finland. So our mining facility in Finland is connected to this substation. It's very stable. The uptime is really high. The energy price is one of the lowest in the world. Okay, to give you another example of our mining facility in Finland, Finland is known to be a boring, stable country, a boring, stable European country. And that is exactly what you want. You want to have a stable government with clear guides, with clear regulations, all right, with predictability. You don't want a government that changes its opinions from one day to the other on how they look at Bitcoin and Bitcoin mining, because that could completely disrupt your operation. You also need to have clear agreements with your supplier, with your energy supplier, with your logistics companies, in order to make sure that you always have access to the best prices, that everything is documented really well. And then the final thing is you need to have long-term infrastructure. So we've built mining facilities just like these around the world in order to plug in all of the mining machines that we're managing. And the quality of this infrastructure is, of course, super important, because you want your machines running 24/7, producing Bitcoin completely automated. Now, when you combine reliable energy with a stable government, clear agreements, and long-term infrastructure, that's when you have all of the ingredients in order to really mine Bitcoin in a very profitable way, completely automated, without you ever even having to touch one of these machines. Because there's mining collectives, just like the ones that we're running, that can take care of everything for you, so that you can simply sit back and watch the automated payouts hit your Bitcoin wallet without you having to do anything. Of course, you still need to pay your energy bill, but yeah, that keeps the machine running. Now, let's move on to the second chapter of this video, which is, what is Bitcoin? Okay, and we're also going to be covering the fundamentals of blockchain, all right? So a simple explanation of Bitcoin. What is Bitcoin? So if you look up the definition of Bitcoin, you'll find that Bitcoin is a cryptocurrency designed to act as money and as a form of payment outside the control of any one person, group, or entity. This removes the need for trusted third-party involvement, e.g. a bank, in financial transactions. Now, Bitcoin was created in 2008, 2009. So I'm going to give you a little bit of background story here. What happened in 2008? Well, we saw the financial crisis. Banks were taking excessive risks with their funds that they were managing for their clients, and many of those banks practically went bankrupt. Okay, and as a result, the government had to bail out those banks. Think about how absurd this is. These banks take crazy risks to maximize their own profits, to maximize their executive bonuses. Ultimately, they fail, they overplayed their hands, and they go bankrupt. And the government simply prints money, injects it into those companies, because if you've heard the term too big to fail, they didn't want many big banks to fail, because it would even be more disastrous for the global economy. So instead, they printed money and they injected it into the financial system, basically saving the guys who were the problem anyways. So yeah, they got a massive bailout. And who picked up the bill for that? Who footed the bill? The middle class, okay? Why the middle class? Because the middle class works really hard to save up money. They have money in their bank account, But by all of that money printing from governments, the value of their money in their bank account slowly evaporizes, okay? Because every single unit of money that gets printed reduces the value of all the other units of money that were already in circulation. Now, Satoshi Nakamoto, the founder of Bitcoin, we don't know if it was a single person or a collective of people. It's a crazy story. If you look up Satoshi Nakamoto, we still don't know who it is, but I think that is kind of the beauty of Bitcoin, okay? Because at this point in time, Bitcoin is no longer a single person, a founder like Elon Musk, Jeff Bezos, Bill Gates. Bitcoin is a community. It is decentralized, all right? And that brings me to the following point. No one can freeze your Bitcoin account, your Bitcoin wallet, as long as you keep it in your own custody. And that is a nice thing. You're no longer reliant on a bank, on a notary, on a government to give you permission to use your funds. No, because we know that if you keep your money in the bank account, they can freeze it from one day to the other. This happens, all right? And then you need to go to the bank, you need to provide them with invoices, contracts, explanations. You basically need to back your money, you need to back your bank in order to release your funds. It is your money. This is a twisted situation, isn't it? Because it is already your money. Yet, you need to back your bank, your banker, in order to let you withdraw your money or use it to buy something that you want to buy. So we see that in banks, we see that in PayPal, we see it in Stripe, okay? The traditional financial system can simply block your account from one day to the other. But with Bitcoin, you're no longer reliant on a bank or a central authority. You are 100% the custodian of your wealth. And the other nice thing about Bitcoin is that there's only a fixed supply. There will only ever be 21 million Bitcoin that will ever be in circulation. And the final Bitcoin will be mined in the year 2140, okay? In a little bit more than 100 years. So if we live in a world, it's a fact, we live in a world where practically anything you can make more of. You can issue more stocks, you can print more money, you can mine more gold, you can build more properties, you can produce more watches, but you can't create more than 21 million Bitcoin. That is a hard limit coded in the code of Bitcoin. It is not possible to create anything more than 21 million Bitcoin. And that is real scarcity, okay? Bitcoin is one of the only truly scarce assets out there. And because we live in a world where practically anything, practically any asset we can create more of, people are looking for real scarcity, real limited supply. And Bitcoin is that asset which appeals to many investors for particularly that reason. And that is why many of the large asset managers, BlackRock, Fidelity, Van Eck, Invesco, many institutional investors, many corporations are now putting a big chunk of their treasury into Bitcoin. Bitcoin can be seen as digital gold, all right? Why does gold have a value? Why is gold risen in value? Because it's really hard to mine more gold, okay? You need to invest in land, in equipment, in people, the rights to mine a certain area, and that's very costly, okay, in order to get that gold out of the ground. Now, Bitcoin is like that digital gold. It's scarce, and that's why the value of Bitcoin has been going up drastically from $1 to $10 to $100 to $1,000, $10,000, $100,000. Now, let's talk about the technology behind Bitcoin. So we talked about Bitcoin. Bitcoin is basically digital currency with no intermediaries. But I'm sure you've heard of the term the blockchain, okay? Because Bitcoin is a blockchain. Now, what is a blockchain? A blockchain is a digital database of transactions that is maintained by a network of computer servers. Here you see it. This is one of the Bitcoin mining machines. Who can easily verify and agree on the contents of the database in a way that makes it difficult for anyone to hack or change. Now, if this sounds a little bit technical, let me demystify it for you in very simple words without any technical jargon, all right? Because it is not supposed to be difficult. After being in the crypto space for 6-7 years, I know that if you ask a typical crypto investor to explain something in simple terms, they can't, okay? They're used to talking in buzzwords, technical jargon, and most people don't have any idea about what they're actually talking about. Now, I'm gonna explain it in very simple words, okay? Think about the blockchain as a simple bank transaction, all right? I don't care where you live in the world, probably you have a bank account. If you send money through your bank, two things happen. Number one, money gets deducted from your bank and it gets added to someone else's bank. And the second thing that happens is you pay the bank a processing fee for processing that transaction. So here you see, if you pay, let's say, if you deduct $100 from your bank account, then the bank takes $1 as a fee for processing that transaction, and then someone else gets $99 added to their bank account. Now, a blockchain works exactly the same way, all right? Most people, again, overcomplicate things, but it works almost the same as a traditional bank account. Namely, if you want to send Bitcoin from one wallet to another wallet, then Bitcoin gets deducted from this first wallet and it gets sent to this second wallet. But at the same time, you also pay a transaction fee to the Bitcoin network for processing that transaction. But who is a Bitcoin network? Because we just discussed that there's no central entity, no central government, no central bank, no central authority that is managing Bitcoin. The key difference with the traditional banking system and the blockchain is that there is no bank, there's no central authority. Transactions on the blockchain are processed by Bitcoin miners, which are simply specialized machines that are running special software that process all of the transactions happening on the network. And in return for running these machines, you earn Bitcoin, which gets directly deposited on your Bitcoin wallet. So again, you send Bitcoin from your wallet to another wallet. It goes through the miners. The miners process that transaction. They make sure that your wallet gets deducted and someone else's wallet, the Bitcoin gets added. And these machines do that completely automated. Those are the Bitcoin miners. So these computers instead of banks. And that is how the blockchain works. Now, who processes transactions happening on the blockchain? We do, the Bitcoin miners. Bitcoin miners are the individuals and companies that have these special machines that process transactions happening on the network. So we verify all the transactions. This happens completely automated. It's not like I'm taking a notepad and I'm making a bunch of calculations and I'm making sure that I'm personally verifying the network. No, this happens with special supercomputers running specialized software, completely automated. All right, these machines, they run 24/7. So these machines, what they do is whenever a transaction happens, they bundle those transactions together into very big blocks of transactions, hence the name, the blockchain, big blocks of transactions. That's what it comes from. And then they process those transactions and they make sure that all of those transactions are updated, that at the end of their processing cycle, my Bitcoin wallet gets updated with the exact amount of Bitcoin that I've either deducted or received, and that the whole network is updated. So do you know that, or have you ever noticed that every time you send Bitcoin from your wallet or an exchange, you need to wait for a certain amount of time in order for that Bitcoin to arrive at the destination or before it actually gets deducted from your wallet? That is the period where the miners are processing all the blocks of transactions, all right? So typically every 10 minutes, a block of transaction gets processed by the Bitcoin network, meaning the Bitcoin miners. And the first one to process this block of transactions gets the reward in terms of Bitcoin, okay? That's very important. Now again, the Bitcoin blockchain and Bitcoin itself doesn't require a bank, no central authority, as long as machines like these keep on working and processing transactions. Bitcoin exists. And this means that Bitcoin gives back the ownership over your financial life, because you no longer need to be in the mercy of the banks and the governments in order for you to store your wealth and to have custody over your wealth and in order to freely move it across the world. Okay, now let's talk about the next thing. How does Bitcoin mining actually work? Okay, so we just covered that most people overcomplicate the Bitcoin blockchain, Bitcoin transactions. The best possible analogy that you can leverage in order to understand Bitcoin mining and Bitcoin and transactions happening on the network is a traditional financial system, having a bank account, sending money from one bank account to another bank account. Then it gets deducted from one bank account, it gets added to another bank account, and obviously you pay a transaction to the bank for processing that transaction. Now, we also just discussed that whenever you're sending Bitcoin on the Bitcoin blockchain, Bitcoin gets deducted from one wallet, it gets added to another wallet, and the person sending Bitcoin also pays a fee to the Bitcoin network. But there's no central bank, no central authority. The Bitcoin network is basically the Bitcoin miners, these machines that are processing all the transactions happening on the network. So, and here's a massive, massive realization which I had 6-7 years ago when I first did all of this research to understand Bitcoin and Bitcoin mining, which is Bitcoin miners are basically the banking system of Bitcoin. How often does it happen to you to become part of a bank, to become your own bank, to take a cut of all of the transactions happening in a very rapidly growing financial system? Well, it's very rare, a very rare opportunity. So why does this matter? Well, right now, you basically have two options. Option number one is you can either pay the bank a transaction fee every time you pay money through the bank. Or option number two is you can become the bank by mining Bitcoin, okay, and earning a cut of every transaction happening on the network. Which one of these two would you choose? Would you pay the bank every time? That's option number one. Or would you rather become the bank and get paid for every transaction happening on the network? Again, option one, pay the bank for the rest of your life. Option number two, become the bank and get paid. I think it's pretty clear, but let me know in the comments below this video, which one would you choose, option one or option two? Now, how do Bitcoin miners actually make money? Well, there's two mechanisms through which Bitcoin miners make money. Number one is the block reward. So remember, every time you do a transaction happening on the Bitcoin network, that transaction gets bundled together into a very big block of transactions. And every time a big block of transaction gets processed, miners earn money. Every 4 years, this reward gets halved. So in 2009, Bitcoin miners made 50 Bitcoin per block of transactions. In 2012, miners made 25 Bitcoin per block of transactions. In 2016, miners made 12.5 Bitcoin per block of transactions. In 2020, miners made 6.25 Bitcoin per block of transactions. In 2024, miners made 3.1 Bitcoin per block of transactions. So here's where we currently are. So miners earn money is basically a subsidy for every block of transactions that they earn. But that's only one mechanism, for every block of transactions that they process. Now, there's also a second mechanism, which is the transaction fees. So we have block rewards and we have transaction fees, okay? During busy periods, miners earn, let's say, an additional 1 Bitcoin for every block of transactions that gets processed. So if it's a busy period and we're in the current phase of the market where we're earning around 3.1 Bitcoin per block of transactions, then we actually earn a little bit more than 4 Bitcoin per block of transactions. If we take into account, let's say, $100,000 per Bitcoin, then miners make around $400,000 per block of transactions processed. And this happens every 10 minutes. Hey, all right? That's a massive amount. Every 10 minutes, $400,000 worth of Bitcoin gets released to the miners. That's crazy, all right? Now let's talk about the Bitcoin halving, because when I speak to an average person about Bitcoin mining, they often tell me, or they ask me like, hey, is Bitcoin mining still interesting? Because every 4 years we have this Bitcoin halving. So here I showed you that every 4 years we see the Bitcoin halving, meaning that the amount of Bitcoin or the block rewards that get released to the Bitcoin miners for processing a block of Bitcoin gets halved. So is Bitcoin mining still interesting then? Well, yes, of course, because the price of Bitcoin has increased rapidly, all right? We've seen Bitcoin go from $1 to more than $100,000 in just 16 years. So I don't care that the amount of Bitcoin that gets released to the Bitcoin miners gets halved because the price of Bitcoin tends to increase way more rapidly. For example, after the first halving, Bitcoin increased with 11,645%. The second cycle, Bitcoin increased with 7,382%. And the cycle after that, Bitcoin increased with almost 2,000%. So again, I don't care that my machines generate half the amount of Bitcoin, because if the price of Bitcoin goes up 2 times, 3 times, 4 times, 5 times or more, which it has historically always done, and again, it's not a guarantee that it will do it again, but historically it has, and I tend to believe that a trend is still active until it has significantly been broken, and it hasn't been broken yet. So yeah, also if you look at these 50 Bitcoin in 2009, when Bitcoin was worth, let's say, $1, then actually miners were making $50 per block of transactions. But now, in this current phase of the market where miners are earning 3.1 Bitcoin per block of transactions, and 1 Bitcoin is worth around $100,000, miners are actually making $310,000 per block of transactions. So even though they were making more Bitcoin back in the days, the value of Bitcoin right now is way higher because of the halvings. So how do these halvings actually push the price of Bitcoin up? Because it's like a hate-love relationship, right? Well, the whole mechanism, if you've paid attention during Economics 101, is supply and demand. Every time we see a Bitcoin halving happen, the new supply hitting the market becomes more scarce. And when the new supply becomes more scarce, there tends to be a supply shock, meaning that there's not enough Bitcoin for people to go around, or they realize that Bitcoin is becoming more scarce while the demand keeps going up. And this means that in the short term, the price of Bitcoin tends to go up very rapidly. And we've seen this happen time and time again. So every time we see this halving happen, the amount of Bitcoin that gets released to the miners gets halved, but the price of Bitcoin tends to shoot up. And this happens every 4 years. So yeah, there's like Bitcoin halving clocks, which basically count down until the next halving. So the next halving will be in April 2028. And then the next Bitcoin block reward will drop to 1.56 Bitcoin per block of transactions. Yeah, we discussed this already. So less supply plus the same growing demand usually means that the price of Bitcoin goes up over time. So here you see it again. So those blue lines, those are the Bitcoin halvings. And yes, Bitcoin is a volatile asset class, meaning that from day to day, the price of Bitcoin can go up, it can go down. However, if we zoom out over the long term, the price of Bitcoin is really going up very rapidly. So in the financial space, we have a saying, when in doubt, zoom out. And that's exactly what you should be doing with Bitcoin. And keep in mind that this chart that you're seeing on my screen, this is on a logarithmic scale. So a linear scale is when something goes from 1 to 2 to 3 to 4 to 5 to 6 to 7 to 8 to 9 to 10. But these are bigger jumps. They go up from 10 to 22 to 50 to 110 to 250 to 550. So they multiply more than 2 times every jump. So every jump is more than a multiple of 2. Now, that is needed in order to fit the full chart of Bitcoin on a small space. But it means that if you do it in a linear scale, the price of Bitcoin shoots up. It's even more impressive. So yeah, the value of Bitcoin, even though it's a volatile asset class, it can go up, it can go down, it can go up, it can go down. But if you zoom out, you understand that the trajectory of Bitcoin is up. And it has been going up from $1 to $10 to $100 to $1,000 to $10,000 to $100,000. And if you believe many experts and analysts, and I believe that this is a very possible scenario, that Bitcoin is going to grow to more than $1 million per Bitcoin in the next couple of years. Okay. Now let's talk about the following. Let's talk about the evolution of Bitcoin mining. Because yes, in 2009, in 2010, 2011, when Bitcoin was still in its infancy phase, it was still early days, there wasn't much adoption. It was just basically a bunch of computer geeks, cryptographers, and very early adopters, which were playing around with Bitcoin, which were running these scripts on their computer that you could simply download from a website, install on your computer, and let it run in the background. And it would process transactions happening on the network. But that was 15 years ago. The market has evolved because wherever there is a financial incentive, okay, a way to make money, smart people get together and find a way to get an edge, okay, to get an edge on their competition. Now, how did they get their edge? Well, they started to search for computing hardware that had more computing power for the same energy usage. And they figured out that those expensive video cards, which they were using to play World of Warcraft, Call of Duty, or whatever game they were playing, could also be used to process transactions happening on the network. And that's when the period emerged where people were building these mining rigs built out of graphic cards, so these NVIDIA gaming chips. And there was actually a very big run on these graphic cards. People wanted to buy them and they were going up in value, especially with the recent chip shortage that happened like, let's say 6 years ago. Like, people were paying a lot of money for these mining rigs, and these mining rigs, they were making a lot of money too. But that wasn't where the evolution of Bitcoin mining ended, okay? It actually evolved even further into the third era, which we called ASIC mining. ASIC stands for Application Specific Integrated Circuit. That's a very fancy word for saying a purposely built computer with one single purpose: to mine Bitcoin at the lowest possible cost. Okay, again, so these machines, they have been purposely designed, optimized, stripped of functionality, added other functionality, but the goal is one thing: they want to produce Bitcoin at the lowest possible cost. Okay, they want to pack the most computing power, and they want to have the highest possible efficiency, and that usually results in the best possible Bitcoin production. So over time, we saw CPUs, so the CPUs of your computer 15 years ago, to GPUs, to then ASICs, and now even within ASICs, there are a couple of more variations, which we're going to be touching on in just a little bit. So why you can no longer mine from home with a regular computer? Well, very simple. If you run this script on your computer, you can do that. But if you run this script from your computer, you're competing with these beasts, with these supercomputers, which have way more computing power than your MacBook or another piece of hardware which hasn't been purposely built to mine Bitcoin at the lowest possible cost. So you cannot compete with these machines anymore. The probability of you earning any Bitcoin is super low. That's why now the golden standard to mine Bitcoin is with these mining machines. So here's what ASICs look like in practice. Let me see if I can play this video for you. So this is me in one of our mining facilities. Yeah, so we have rows and rows and rows with these special mining hardware, which is processing all those transactions happening on the network. Unfortunately, this video is a little bit slow. I'm going to play it just one more time. So here you see me walking past all of these ASICs in our mining facility. All of these machines are processing transactions happening on the network. And this is now the golden standard of mining Bitcoin. So are there home-friendly options to mine Bitcoin? The answer is yes. And I actually brought one of these here with me. So this is a purposely built home mining machine. It's a BitX Bitcoin mining machine. It costs a couple of $100. And what this machine does is it has a very small chip with obviously not as much computing power as this machine, and it can mine Bitcoin for you. It's a solo Bitcoin mining machine. But is it really profitable? No. If you ask me, this is just a waste of time. It's great if you want to learn about Bitcoin mining, if you want to play with it around, if you want to educate yourself, but it's not profitable, if you ask me. The probability of just losing your entire investment is very big, but purely for the purpose of education, I guess the suppliers of these mining hardware, they found an interesting niche for that specific audience. But if you really want to make serious money with mining, then these type of machines, they are the golden standard. So these home mining machines, they've got quite a lot less noise. So these big machines, they're very noisy. It's like having an airplane engine in your living room. You don't really want to have that in your house. They have a lot lower power requirements, but they also have a lot less computing power. And computing power kind of determines how much money you're making. If you want to make a lot of money with Bitcoin, you want to maximize your computing power. And this is just a small device with the minimum amount of computing power. So in the end, my conclusion is they're not really profitable, and they're more of a gimmick. They're fun if you want to learn, if you want to experiment, but not great if you actually want to make money. Now, the latest generation of Bitcoin mining machines are actually called water-cooled ASICs. So here next to me, you see an air-cooled machine. So here on the front, there are fans, and these fans, they take in cool air and they cool all the chips in the machines. But smart engineers, they thought, how can we make these machines even more efficient? Is by pumping cold water through these machines, cooling them, and then extracting the warm water on the other side. And that's actually a very smart invention. That's the latest generation of mining machines. So here you see what can happen to air-cooled machines in very cold environments. So when a lot of snow enters a mining facility, yeah, it's a risk. It can go into the machines, the chips can get wet, and it can cause damage. Whereas with these machines, nothing can really go inside those machines. And that is also how we are currently building many of our mining facilities. For example, our latest generation of mining machines. Here you see these are all hydro-cooled mining machines. So again, this was the first generation of hydro-cooled mining machines. And this is currently how hydro-cooled mining machines look like. So on the back of these machines, cold and water gets pumped through these machines to cool them off. And it looks significantly different than these traditional air-cooled machines. So here, again, hydro-cooled machines, here, air-cooled machines. So hydro-cooled machines maintain more stable temperature, have a really great efficiency, and they pack a lot of computing power. We still use air-cooled mining machines in a couple of our farms, and in some scenarios they are our machine of choice, but in many of our new data centers, for example in Finland, we use these hydro-cooled machines. Because with hydro, there's less wear and tear, there's less of the components, touching each other and causing wear and tear. There's fewer failures and there's more reliable performance. And ultimately, that's what you want. You want stability, predictability over time. So this results in the fact that machines last longer and they operate exactly as they should. All right, predictable, income-generating machines. Now let's talk about the next chapter. So let's talk about the real cost structure of Bitcoin mining. So I like to compare Bitcoin mining with mining gold. So whenever you're going to mine gold, you basically need to invest in land, equipment, and in people. And if you do it the right way, then you can produce gold below its market value. And when the price of gold goes up, you can sell it for a really nice profit. And there have been companies and individuals that have been making a lot of money for the past few decades in this industry. All right. Now, when we're mining Bitcoin, it's kind of similar in the sense that you don't invest in land, equipment, and people, but you invest in machines and you pay electricity. And if you do it the right way, then you produce digital gold, aka Bitcoin, below market value. And when the price of Bitcoin goes up, you can hold on to it, because if you believe Bitcoin is going to go up and up and up even more, then why sell it? But if you want to sell it, then you can often sell it for a really nice profit. Now, your two biggest costs as a Bitcoin miner are the following: your hardware and your electricity. Now, a mining machine can easily cost thousands of dollars per unit, okay? Your energy bill, well, these machines, they can consume as much as a washing machine or a dishwasher, and some models of machines can even consume as much as 2 dishwashers. And it's not like a dishwasher where you turn it on for a couple of hours per day. No, these machines run 24/7. So if you don't have access to cheap electricity, you're not going to be able to mine Bitcoin profitably. Okay, so again, let's talk about why home mining is dead for most people. Well, residential electricity rates are simply way too high. The average electricity price in the world is around 17.4 cents per kilowatt hour, okay? 17.4 cents per kilowatt hour. And the trend tends to be up, okay? It tends to go up and up and up over time. Part of that is inflation. The European average energy rate is significantly higher. So where I'm originally from, in the Netherlands, the energy rate is between 25 to 35 cents per kilowatt hour. Here you see the trend is up. You know, Europe has made a lot of really stupid decisions when it comes to energy. For example, they have closed down their nuclear reactors. In the Netherlands, where I'm from, we had a very big gas field. They closed down the gas field. They even poured concrete in the gas extraction field so that they could never access it again. Like, they made stupid mistakes, all right? They were so woke with their decisions. Obviously, I prefer green forms of energy, renewable forms of energy, but again, as a country, access to cheap energy is so important, and it's also important to have access to cheap energy to supplement, for example, green forms of energy. But Europe, they didn't think about that really well, so the energy rates are only going up and up and up. In the US, residential energy rates are also going up over time. That's just a trend that we're seeing. So in addition to increasing electricity rates, most people don't have the technical know-how to install and maintain machines. Okay, how do you install a machine like this? How do you make sure it's running? How do you optimize its performance? What happens if it, gives you an error? Do you know how to fix it? Do you know how to troubleshoot it? Most people don't. That's why it doesn't make sense. They also produce a significant amount of heat. So every single one of these machines, they generate on average like 80 degrees Celsius of heat. That's like enough to heat a sauna or a jacuzzi, or they even use it in greenhouses to grow vegetables. The noise is very extreme. So each of these machines produces, let's say, the same equivalent sound as an airplane engine or a vacuum, which is next to your head. So that's why it is simply not practical to have it in your basement, in your attic, in a shed on your land, whatever. It is not practical. The heat, the noise, the technical skills. Many people don't even have the power infrastructure, because these machines, they require a lot of electricity, and it draws a lot of energy continuously. And if your power infrastructure isn't set up the right way, then you're going to get power cuts, or you're going to cause outages. So yeah, it is not practical for most people to mine Bitcoin at home. So current machines, they use as much as 2 washing machines, all right? That's how much energy they're using. Now, I want you to understand profitability, because every setup is different, okay? So depending on what machine you're using, what electricity cost you have, and what the scale of the operation is, you're going to be ending up with a different type of profitability. Now, we have been building mining facilities for the past 6 years. We've helped over 850 investors, from individuals to companies to investment funds, to get started with mining. We've got really great connections with suppliers. We buy hundreds of machines in bulk every single month. We get bulk discounts, which you, as an average person, don't have access to. And because we ship hundreds of machines every single month, we get priority shipping and logistics prices, making sure that everything that we do has the lowest price, from procurement of the machines to shipping the machines to negotiating the lowest energy cost, because we're managing more than 80,000 machines right now in many of our locations worldwide. And if you're interested in how you can potentially also get started with Bitcoin mining and leverage our mining collective so that you can mine Bitcoin with one of these machines without having to do all of the hard work and taking advantage of all of our price and cost advantages, then what I recommend you to do is I want you to click in the link underneath this video and schedule a call with me or one of our team members. And on the call, we'll walk you through the numbers. We'll show you which machines we're currently buying for ourselves and for our clients, and the reason why we're buying those machines and the price of those machines. We'll give you a virtual tour of our mining facilities. We'll break down what the process looks for you. And of course, you get the chance to ask any questions that you may have about Bitcoin mining, about the whole process, about the mining facility. Literally any question that you may have, you can ask it to us on that call. And we are there to make sure that we provide you with all the right information so that you can consider whether Bitcoin mining is something that fits you, your investment goals, your investment portfolio, or not. And if it isn't something for you, no problem. In that case, at least you're going to be leaving the call a lot smarter, with more insights about Bitcoin mining, because knowledge is power. But if it is something for you, then you could even get started with mining Bitcoin in the next 7 to 10 days with a setup that is completely managed for you. No technical skills required, no prior experience with mining required. We will do everything for you so that you have one of those machines or multiple machines connected directly to your Bitcoin wallet of choice. You receive a mining dashboard where you can track the performance of your machines 24/7. Everything is 100% transparent. And we run it for you, okay? For 4, 5, 6 years until the machine is at its end of the lifetime. And we've been doing this for hundreds of investors worldwide. So if this is something that you may be interested in, then click on the link below this video, schedule a call with me or one of our team members, and then we'll provide you with all the information that you need and we'll answer any questions that you have. Okay, now let's talk about another really important aspect of mining, which is solo mining versus mining pools. All right, so when you are mining Bitcoin, earlier in this video, we talked about the fact that the first Bitcoin mining machine that processes a block of transactions earns all of the rewards. So currently the rewards is 3.1 Bitcoin per block of transactions. And it's kind of like a lottery, okay? Let's say that we both go to a shop and we buy a lottery card. Then we have a certain probability of winning the jackpot, okay? With solo mining, meaning that you take either a machine like this, so this is a home solo miner, it has very low computing power, so the probability of you winning or processing the block of transactions first is very small. There are some people that are really lucky and they earn a full block reward, so 3.1 Bitcoin, but it's very rare. You can also solo mine with these machines. However, I want to earn money as a miner, and I understand that most of our clients are in it to win money or to earn money as a miner. However, if you solo mine, the probability of you hitting a full block of transactions is very small. So solo mining odds are 1 in 10 to 100 million per machine. Machines can run for years. They can keep trying to guess or process the block of transactions first, and for the full lifetime of the machine, it may never happen, okay? So you invest in a machine, those machines are quite costly. A small machine like this one costs a couple of $100. A big machine like this one costs a couple of $1,000. And if you try to solo mine, then there's a very big probability that you don't earn anything. So you have 0 returns, 0 payouts. And meanwhile, all the time you've paid for electricity and you had no returns, no payouts, meaning you made a big loss. Now that kind of sucks, right? That sucks. I wouldn't want to do that. And that's why I say I am in Bitcoin mining because I want to make money. So what is the solution? The solution is a mining pool. A mining pool, in very simple words, means that a collective of machines, hundreds of thousands of machines, work together. They combine their computing power and they process transactions on the network together. And if one of those machines hits a block of transactions first, then it earns the block reward and it divides it over all the machines in the mining pool that have worked together in order to earn that Bitcoin. So yeah, all of those people owning mining machines, they combine their machines together in what we call a mining pool. So they combine the computing power of these machines. And when the pool solves a block, then all those owners of machines, they earn Bitcoin. And how does this Bitcoin gets divided? Well, Bitcoin gets divided proportional over the computing power of the machines. So this is an older generation machine, which I use as a show model. This machine has 120 terahash of computing power. A new generation of machine, for example, uses 270 terahash of computing power. So let's say that both of these machines work together, then proportional over the computing power. So let's say if we add 120 terahash to 270 terahash, we get 390 terahash. So that's a total computing power. And this machine would get a part of, let's say, 120 over 390. So that's the fraction of the compensation that this machine will get compared to the total computing power in the pool, okay? Now, if a group of friends all chip in, so yeah, let's use an analogy for this mining pool. So if a group of friends all chip in money and they buy a stack of lottery tickets, then combined, the probability of them winning the lottery is higher. And when one of those lottery tickets hits the jackpot, then they split it over the people in that collective, all right? So friends get rewarded proportionally based on how much money they chipped in to the pool, okay? That is a very simple analogy of a mining pool. So what are some of the pros of mining pools? So first of all, mining pools make sure that you earn consistent, predictable payouts instead of waiting and hoping years that, you know, one of your mining machines may win the jackpot, like 1 in 10 million odds. No, instead of gambling, your machines are actually producing consistent, repeatable payouts day by day. Okay, it's also less technical and less complex because you can simply connect one of these machines to a mining pool and then all of the computing power gets bundled together. The pool handles all of the coordination. And also, it's way more financially viable for smaller operations, all right? So if you are an individual miner that wants to join a collective, you can simply bundle your machines together into the mining pool and it can just earn Bitcoin proportional over the computing power that is contributing. So what is the current cons of mining pools? So a mining pool earns a small fee, or they charge a small fee, which cuts into your earnings. So mining pool fees can be somewhere between 2 to 4%. It is a centralized point of trust within a decentralized system. So again, Bitcoin has been created as a decentralized financial system, meaning there's no central bank, no government, no central entity having control. Yet, if one mining pool basically manages the earnings of hundreds of thousands of machines, then the mining pool has a lot of influence over the network. So yeah, it is a centralized point. Do I really care about it? Not really, because there's like 4 to 5 very large pools. So it's not that centralized. There's still a lot of options and there's hundreds of smaller mining pools out there. So if one mining pool basically messes up, then trust me, miners will just simply shift to whatever pool is best for them at that point in time. Yeah, and you must trust that the pool distributes the rewards fairly and that they don't keep anything behind. So what do I do? Well, I only mine with mining pools because it gives me the best, most stable, and most reliable returns. All right, and I like predictability and stability, especially if I'm going to be investing a couple of $1,000 into a machine like this one. Okay, let's talk about why home mining doesn't scale and what the solution is for that. So let's recap. There are some limitations of mining at home, all right? There's the heat that these machines produce. They get 80 degrees Celsius. There is the crazy electricity consumption that these machines have and the rising residential electricity rates. There's the noise that these machines create, so like a vacuum next to your head 24/7. The power consumption, so each of these machines use an equivalent amount of power of one dishwasher or washing machine, some even the double or triple the amount of washing machines running 24/7. And most people don't have the technical know-how in order to basically install, troubleshoot, and manage these machines. So rather than mining at home, you need to shift your mindset. You need to stop thinking solo and you need to start thinking collectively. Remember the evolution theory of Charles Darwin that we discussed in the beginning of this video. It is not the smartest ones, it is not the strongest ones who survive, it's the ones that adapt the best to a changing environment. And if mining at home isn't viable anymore, you should consider mining in a collective. Because I can tell you, people mining in a collective, they're still making a lot of money. But the question is, are you going to evolve or are you still going to be stuck in that old mindset of wanting to mine at home, wanting to control everything yourself? So what is a mining collective? So the simple explanation of a mining collective is the following. We pool resources. So we do big buying rounds every single month. We buy hundreds of machines. We buy machines in bulk. As a result, we get bulk discounts. We get these machines at the best possible prices. We get the lowest shipping rates. Because we are mining at a very big scale, we build infrastructure, okay? Big data centers like this one where we can plug in all of the machines, where we have really great energy rates, where we have staff members that can manage all of the machines. We have expertise, so we've got more than 6 years of expertise running and managing these mining machines. And by pooling together our buying power and doing these buying rounds, we get the best possible discounts. Overall, the summary is, the bigger the mining collective becomes, the more investors mine with us, the more machines we have under management, the lower the cost of the machines and the electricity, the more profit we all make. And that is a win-win. And that is also the reason why I'm making this video, because the bigger our collective becomes, the more money we can all make. And we operate at scale. We operate at a scale that no individual miner can really match, okay? So together, we can achieve a lot more than we can if we all mine alone. And that is the power of a mining collective, all right? It is really the win-win structure. Together, we're a lot stronger, we're a lot better. But the first step is to embrace the fact that mining at home is dead, and that the only way to still mine very profitably is to mine as a collective. So why does scale change everything? Well, currently we're managing 80,000 Bitcoin mining machines, all right? We've got several mining farms across the world, okay? We have a lot of track record, we have a lot of leverage within this industry. And whenever we sit down with energy suppliers and suppliers of mining hardware, we can negotiate the best possible rates, all right? Rates that you would never have access to. We buy machines in bulk. So here you see a video of our inventory storage room. Here you see how many machines are in this room, hundreds, if not thousands of machines. And because we buy so many machines, we get the best possible prices. We've got professional maintenance teams, okay, that are managing our team. So whenever a machine needs to be installed, whenever it needs to get maintenance, we've got 80 technical staff members that are on standby. We've got the logistics infrastructure. So machines, because we ship machines in such big volumes, we can ship them very quickly, we can ship them very economically. And our goal is always to make sure that a machine lands in the facility at the lowest possible cost in the shortest possible time. And we've really optimized our setup to make sure that that happens. So why does location matter as much as skill? That is a lesson that I've learned building multiple operations across multiple countries. So cheap electricity alone is not enough, okay? If you're purely focused on cheap electricity, you're gonna run into many walls, all right? So what you actually need is a complete picture. We touched upon this before. You need access to reliable energy, not only cheap, but great uptime, great stability, locked in with great contracts. You need to have stable government, a stable jurisdiction to make sure that there's no sudden changes, that the perspective on Bitcoin mining is great. You need to have clear agreements with all suppliers, and you need to have great infrastructure to actually plug the machines in and to let them run 24/7 and earn Bitcoin. Now, let's talk about why Finland, okay? Why are we currently so bullish on Finland, okay? With bullish in the world of investing, we mean, why are we so positive? Why are we so hyped? Why are we so excited about Finland? Well, Finland is not just a good location. It is the best location in Europe for Bitcoin mining. And here's exactly why. So all of our farms, we run it on 100% renewable energy. And Arctic Mining, meaning our Finland branch, we call it Arctic Mining. Our parent company is called Epic Mining, but our Finland operation is called Arctic Mining. It runs on 100% renewable energy, okay? Our facility runs on, most of our facilities run on nuclear and hydro energy. Let's talk about hydro. So hydro is where energy gets generated through water, okay? Through these hydro dams, where water is basically firing up very large turbines, and those turbines turn kinetic energy into electric energy. And nuclear. So why is nuclear such a great energy source for mining? Well, very simple. Nuclear is one of the most stable, cheapest, most reliable forms of energy that we have right now. And when we talk about nuclear, people tend to think about Fukushima and what was the other one again? Chernobyl, okay? Those are recent, not recent, like in the past few decades, examples of nuclear meltdowns, okay? Issues with nuclear reactors. But I want to tell you that modern nuclear reactors are way safer than Chernobyl, okay? Current modern nuclear reactors are way safer because they've got special monitoring systems. They are able to shut down when an issue occurs, and they don't escalate, or there's not many issues that can happen, just like Chernobyl, okay, like a very big disaster. So this whole nuclear industry has gone through a big evolution in the past few years. And this is also why a lot of the superpowers, so the United States and China, are embracing nuclear again. They're rapidly building out nuclear reactors currently because they understand that nuclear is the cheapest, most stable, most reliable form of energy that we have right now. Europe made a massive mistake by shutting down many of their nuclear reactors. If you look at some of the biggest tech companies, Amazon, Google, Meta, they're all running their data centers on nuclear energy because they also understand that nuclear is the future. And it's readily available without having to burn any fossil fuels, okay? So it's quite cheap, and modern reactors can actually manage the nuclear waste very efficient. So in many cases, the nuclear waste is very small. It can often be repurposed in order to make fuel for other processes, or it can be stored and contained in very controlled environments. So I do believe that the future is nuclear. Our Finland operation runs on nuclear as well. And it's just the cheapest source of energy. And Bitcoin miners are actually one of the greenest industries out there. The renewable energy market has gone up quite rapidly from, let's say, $1.5 trillion globally to $7.1 trillion. And this aligns with long-term trends, okay? So let's talk about those a little bit more. So one of the reasons how we, as Bitcoin miners, we're not only running our operation based with green energy or based on green energy, we're also making sure that no energy gets wasted, because these machines, they can get very hot, 80 degrees Celsius. And heat is a byproduct that is in many cases unwanted. So for example, we have a mining facility in Ethiopia, and our machines, they get quite hot, and we need to have special cooling systems in order to make sure that those machines are cooled. And we have those, but paying for cooling is an additional energy expense that you rather not have. But what if that heat isn't just a negative byproduct, but instead of wasting it, you can capture it and you can actually sell it back? Well, that is the whole setup that we have in Finland. So in Finland, we sell the heat back to the government, to the district heating companies, who in turn uses the heat of those mining machines in order to heat schools, hospitals, universities, and whole neighborhoods. So the whole heat byproduct turns into something that has a really big value. And because we have such a great partnership in Finland, we indirectly get incentivized by the Finnish government to mine Bitcoin, because that heat, it warms homes, schools, and commercial buildings. So our heat isn't a problem, it becomes part of the solution. And in Finland, I was there not that long ago, and it was quite cold, okay? It was minus 14 degrees Celsius. And I was just thinking to myself, wow, in this country, if you don't have access to heating, the whole country just stops, because life can't continue if everyone is just freezing. So heating is very essential. And if you can repurpose the heat from those machines, then you can create not only a win for us, the Bitcoin miners, not only a win for the collective, but also a win for the community, for a country, a smart win-win partnership. So this creates a direct financial benefit. So by supplying heat back to the grid, Arctic Mining, our Finnish operation, has secured favorable long-term energy agreements. So because we have such a positive impact on the local environment, we've been able to lock in one of the lowest energy rates for the long term. So I really see this as a win-win partnership between Finland and the mining operation. We help the community, schools, hospitals, commercial buildings, homes, and we in return also get to mine Bitcoin with one of the lowest energy rates in the world. So we talked about this, the importance of having a stable government and clear agreements. Well, the result of this great win-win partnership is that we've been able to fix long-term energy contracts, okay? So our energy agreements are locked in for the long term with the Finnish government, and this results in rates that don't fluctuate month to month. Electricity is normally the largest and most unpredictable cost in Bitcoin mining, and with fixed contracts, those costs are stable and predictable. So you can calculate and you know your cost basis in advance. And this is a structural advantage that most mining operations in the world simply do not have. On top of that, because Finland has such a great energy infrastructure, our uptime is practically 99.9, almost 100%. And all of this is visible through a mining dashboard where you can track the performance and the uptimes of your machines 24/7. So that this is completely transparent and possible for you to constantly check if you want to. However, we do provide this, but it doesn't mean you have to check it. Many of our clients message us and let us know that they think it's really fun and they enjoy it to wake up in the morning, checking their mining dashboard and seeing how much Bitcoin they earned while sleeping or while they were on holiday. Other clients, they rarely ever check their dashboard. They simply pay for their energy bill and the Bitcoin gets deposited directly to their Bitcoin wallet of choice. If you want to check it or not, that's all up to you. In any case, we wanted to make sure that we have a system in place to maximize the transparency within the organization. So you can check you can see anything within your dashboard. You can see the machine performance, so how much Bitcoin your machine has generated, how much energy it has used, and if there's any irregularities. But our team will also be monitoring all of the dashboards, making sure that all of the machines run smooth. And if any issue is caught, it will be resolved immediately to make sure that there's maximum continuity of your machines and then there's minimal interruptions and there's near perfect uptime for our miners. Now the fifth thing, which is really nice, is the following. Finland kind of has a reputation to be a boring, slow, predictable country, okay? It has stable regulations and it has government cooperation. And Finland operates under clear, stable regulatory framework. And that is really nice for Bitcoin mining. Again, we want to have stability, predictability, and Finland provides all of that to us. So the government, we have government cooperation, so that means that no sudden policy changes, no surprise bans. Finland focuses on predictability and responsibility. We've set everything up for the long term, so no shortcuts, no quick wins, but everything has been set up long term. So sustainable decisions that will still make sense in 5 to 10 years from now. And this is a massive advantage because this gives us peace of mind that no other mining location can fully replicate. Now let's talk about the full picture, okay? The mining industry by now is getting quite big, okay? We've seen in the previous cycle the emergence of publicly traded Bitcoin mining companies, Argo, Bitfarms, BitDigital, CleanSpark, Core Scientific, Marathon, etc. And most of these mining operations are optimized for one variable. They just want cheap electricity, all right? But instead, Epic Mining or Arctic Mining, our Finnish operation, we don't only focus on cheap electricity. We zoom out and we look at a much bigger picture. We look at how can we get one of the cheapest energy rates in the world at the same time by using renewable energy, by using 100% green energy. And the heat that our machines produce, how can we recover that? And how can we use that byproduct and turn it into some additional value? And how can we lock in this entire setup into long-term contracts with the government so that over the long term, we have 99.9% uptime, one of the highest uptimes in the industry, while operating within a stable and predictable environment, which is the Finnish jurisdiction. And that is what we do with Epic Mining or Arctic Mining, which is specifically our Finnish operation. And all of this, what I've just mentioned to you, is what I've learned in the past 6 years traveling across the world, mining Bitcoin myself, managing 80,000 machines for 850 plus investors from all around the world, and putting all of these learnings and constantly learning and improving and further optimizing and trying to find the next edge for our clients in order to make sure that they can maximize their results with Bitcoin mining. So let's talk about the plug-and-play system that we have created. So what is Epic Mining? So Epic Mining was founded by me in 2020 with the goal to make Bitcoin mining easy, accessible, and profitable for the average investor. Why? Because I wanted to get started with mining. And I did all my research on the internet and I ran into so many walls trying to figure out how everything worked. None of the videos that I could find on the internet were really useful. There weren't really great solutions out there. So I set out to solve the problem myself. And right now, we have built multiple sites across the world. And this video specifically is about Arctic mining, our Finnish operation. So right now, if we zoom out, we've got over 80,000 mining machines under management. We've got more than 850 investors worldwide. We've got 80 technical staff members managing the operations. And here's how it works specifically for you, if you want to get started with mining too. So number one is we procure the machines, okay? We've got ongoing conversations with all of the suppliers of mining hardware. And every month we do an analysis of what the best machine is on the market. And we buy those machines in bulk. Those machines in Finland, they're special water-cooled Bitcoin mining machines. And we deploy those machines in Finland. So we install them, we set them up, we connect them directly to your Bitcoin wallet. We make sure they're running at a stable temperature and that the heat that is generated by those machines is being fed back to the district heating. Because these machines are hydro mining machines, they have less wear and tear, so their lifetime is a lot longer, on average between 5 to 6 years. So yeah, they have a longer lifespan, they have more reliable performance, and we basically take care of everything on the back end so that you can simply lean back and watch the automated payouts hit your wallet. Also in the back end, we'll make sure that all of the heat gets recovered, that it gets piped, and that it gets sent to the district heating. Normally our mining facilities are on the sites of the district heating companies themselves. So we've got direct integrations with their systems. And then in turn through the district heating systems, we heat the communities. So schools, hospitals, universities, commercial buildings. And because we're doing this, because we have such a win-win situation with the community, with the Finnish government, we've been able to lock in really great energy rates for the long term, meaning we have predictability. So more stable, predictable cost base, no crazy surprise electricity bills, because that is important. Energy is one of the most important and biggest costs in mining. And we've basically solved this by not only looking at trying to get the lowest electricity price in the short term, but actually looking at the full picture of locking in that electricity price, creating a win-win with the local community, working with the government, trying to recycle heat or repurpose the heat, setting up 24/7 monitoring systems to make sure that everything is tracked and transparent and that we have a really high uptime. So what is the investor? How does the experience look like for you if you want to decide that you want to invest in mining? Well, number one is you have gone through this entire video all the way up to this point, meaning that you, by the end of this video, have all of the knowledge that you need in order to get started with mining. Again, I promise you, you don't need any technical knowledge. You just need to understand what we have discussed in this video today. Once you start mining, you will get your dashboard where you can track the performance of your machines real time. Those machines are connected to your Bitcoin wallet of choice. So directly from your mining machine through the mining pool, your payouts get deposited on your Bitcoin wallet of choice. In this case, this is a Ledger wallet. It costs, let's say $80 or something like that. It's a very cheap, very low cost in order to get your own hardware wallet. This is the most safest form to store your Bitcoin. It gets deposited directly to any wallet, so you don't need to have a Ledger wallet, but it can be any wallet, whether it's Coinbase, Kraken, Binance, whatever. We just need a wallet address, which we can connect to your mining machine, and then we can set it up. So it's fully passive. Once we've set it up, you will collect Bitcoin until your machine basically reaches its end of lifetime, which is somewhere between 4 to 6 years, okay? So these air-cooled machines typically last between 4 to 5 years, hydro machines between 5 to 6 years. So this is why mining is a win-win-win model, all right? So let's talk about the first win. You as the investor get access to Bitcoin mining through the collective, making sure that you get access to the cheapest cost of hardware, the cheapest electricity rates, which you otherwise wouldn't get access to. So we make sure that you get access to an industry, to a business model, which would otherwise not be viable to you. Okay, that's the first win, your win. The second win is the win for the suppliers, all right? Because The suppliers, they don't want to do business with individual clients that only buy one machine and cost them a lot of headache. They want to do business with collectives like us that buy hundreds of machines every single month. And we do that consistently. And as a result, we get the best possible price. But those suppliers, they get predictability. And over time, they value that relationship and they give us preferential options. Okay, so suppliers prioritize large, consistent buyers. Individual buyers of 1 to 10 machines, they simply get ignored. It's not worth the time and hassle. Then let's talk about the mining collective. So again, we also talked about this a couple of times before, but the larger the mining collective becomes, the more people mine with us, the more machines we have under management, the better our negotiation position to bring down the cost of machines, to bring down the electricity rate, and the lower the cost, the better the profitability for everyone in the process. So the final win is a win for the community. So the Finnish community in this particular case, because we are providing the heat back to the district heating company, meaning that they can heat whole neighborhoods, schools, hospitals, etc. And this has been really valued by many of our investors. So here, for example, you see a Trustpilot review. I'm happy with this investment for future extra income. The first company I know that pays out monthly from the start. So far, very reliable. Here's another review, a reliable and stress-free way to mine Bitcoin. I've been mining with Epic Mining for about 2.5 years from now, and I can honestly say it has been one of the best decisions I've made when it comes to investing in Bitcoin. Like many people, I was curious about mining, but I didn't know where to start. I didn't have the technical knowledge, the space, or the access to cheap electricity to run mining machines myself. That's when I came across Epic Mining. From the very beginning, they made everything incredibly simple and straightforward. What stood out to me immediately was how professional and helpful the team was. Again, I don't want to go over each of these reviews in detail. We've got hundreds of reviews from our clients. Here, another review from Sam. He's saying, Mitchell is a brilliant guy. I learned so much from him. He was one of the first people who introduced me to Bitcoin, and he helped me to make a lot of money with it. So yeah, we've got social proof from more than 850 investors worldwide. We've been doing this for more than 6 years, okay? And we keep on doing this every single day. We keep growing, we keep learning, we keep expanding. So how do you make money as a Bitcoin miner? Well, you make money through 2 direct income streams. Number 1 is the block rewards. We discussed how whenever you're doing a transaction on the Bitcoin network, your transaction gets bundled together into a very large block of transactions. And whenever a miner processes a block of transactions, they basically earn block rewards. So we talked about those block rewards. Currently, the block rewards are around 3.1 Bitcoin per block of transactions. Or if you calculate with a Bitcoin price of, let's say, $100,000, you're at around $310,000 per block of transactions, which is the compensation that miners earn when they process a block of transactions. Now, oftentimes, miners are part of mining pools, and those 3.1 Bitcoin gets distributed across all of the miners in the mining pool, proportional over the hash rate, so the computing power that they're contributing. So blocks of transactions are mined every 10 minutes, and there's around 144 blocks per day. So that means around $45 million in block rewards that get distributed to miners every single day. So right now, there are already a lot of people earning money from Bitcoin mining, okay? We haven't missed the boat yet. It is not too late. Average people like you and me are still making a lot of money with Bitcoin mining. So other people are still doing it. Miners are making around $1 billion per month mining Bitcoin. The question is, are you going to take a piece of that pie or not? And if you want to take a piece of that pie, if you believe that just taking a small percentage of a very big number can already be very interesting, well then you might want to consider starting mining Bitcoin. And the more computing power you have and contribute to the network, the bigger your share of the rewards become. Now, the second mechanism through which miners make money is through transaction fees. So every Bitcoin transaction includes a fee paid to the miner who processes it. So if you want to send Bitcoin from one wallet to another wallet, you need to pay a fee to the network to process that transaction. And that fee goes directly to the miner. So there's 2 forms of compensation: block rewards and transaction fees. And both of those combined make up the total compensation for miners. Now, I like to look at this as us, the Bitcoin miners, being the banking system of Bitcoin. Earlier, I asked you the question, would you rather pay the bank every time you do a transaction through the banking system, or would you rather become the bank and get paid every time a transaction happens on the network? Which one do you want, option 1 or option 2? Drop it in the comments below. Simply 1 or 2, or option 1, option 2, or pay the bank or become the bank. I'm just curious to hear your thoughts, because when I came to this realization, for me it was quite clear. I wanted to become the bank. And the nice thing about the Bitcoin network is the stock market closes. It goes from Monday to Friday. The bank closes. It also goes from Monday to Friday. But Bitcoin runs 24/7. So Bitcoin miners process transactions 24/7, 365 days a year, no holiday, no closing time. This happens completely automatically, okay? You don't need to buy any products. You don't need to think about, fulfillment. You don't have any annoying customers, customer support. It is actually what true passive income looks like. Okay, I know. I hate the term passive income because the whole internet is full with passive income this, dropshipping that, affiliate marketing this. And the deeper you look into those models, the more you realize that it's actually a lot of work. It's being sold as passive, but it is not passive, all right? But this machine runs 24/7. It is the closest thing to a money machine, a real life money printer that I can think of. Again, I don't believe in, get rich quick, those kind of things. You buy a machine, you run the machine for 4, 5, 6 years. You join a mining collective. They do everything for you so that you can simply lean back and watch the automated payouts come in. You can sleep, you can eat, you can spend time with your family, you can travel. It doesn't matter. These machines, they run for you. So what the actual numbers look like. So Bitcoin miners collectively earn between 30 to 60 million per day, roughly $1 billion per month. In 2021 alone, Bitcoin miners earned $16.7 billion. Why am I saying this? Because people think they missed the boat. They think mining is not profitable anymore. It is still profitable. A lot of money is made. However, here's the thing. Most people, 99.9% of the people, they don't have the technical know-how. So they miss opportunities like this. But that's just because of a lack of knowledge, a lack of understanding, a lack of access, a lack of watching this video. And I'm trying to give you everything that you need to know in order to understand this industry and in order to make up your mind whether you want to get a piece of this action or not. So if you want to do that, well, then you might want to consider joining a mining collective like us, because at Epic Mining, we're managing more than 80,000 machines across different facilities. All right. And if you believe that Bitcoin might grow to $1 million per Bitcoin, and you believe in the future of Bitcoin, that it's going to go up in value, then you might want to consider getting in on the action, getting some machines, and accumulating as much as possible. So here's an individual example, all right? So a modern ASIC machine, a modern Bitcoin mining machine, they have a typical hash rate between 200 to 500 terahash per second. At competitive hosting electricity rates, a single machine can generate Bitcoin. Let's say 0.007 Bitcoin per month. Now, you can scale that income by multiplying the number of machines. So if one machine produces 0.007 Bitcoin per month, then 5 machines produce 5 times the amount of Bitcoin, 10 machines produce 10 times the amount of Bitcoin, 20 machines produce 20 times the amount of Bitcoin. So it's a very scalable form of income. And the compounding effect is very significant, because with Bitcoin mining, there's a couple of different compound effects that you can think about. So if you're mining Bitcoin the right way, then first of all, you are accumulating Bitcoin every day. You're not only accumulating Bitcoin, but if you're doing it the right way, you're accumulating it below its market value. Now, if Bitcoin goes up, then the value of that Bitcoin goes up over time as well. And Bitcoin is known as the best asset class of the past decade because it has outperformed all the other asset classes in the past decade. Now, the probability that it will increase in value over time is quite high looking at the historical data. However, it's never guaranteed, but if we look at the past trend, then the probability is quite high. So those are the 3 compound effects. You accumulate Bitcoin every single day, regardless if the market goes up or down, regardless if you have a bad day, whether you're working or not, your machines accumulate Bitcoin. Then if you're doing it the right way, you're producing Bitcoin below market value. And then the value of that Bitcoin goes up like it has in the past few years over the long term. And that really helps you to build cash flow, to grow your net worth. And as a result, yeah, my personal result is more than double the total investment. In fact, way more, I can say. So yeah, it has really helped me to grow my net worth. I know many of our clients have also been very positive about the results, very happy about the Bitcoin that they're accumulating. So when you mine Bitcoin, you're not only earning income, you're accumulating an appreciating asset, all right? So right now, you're earning Bitcoin. And every Bitcoin you mine today could be worth a lot more if you're holding on to that Bitcoin. Could be worth twice as much, 5 times as much, 10 times as much. People often ask me for my price predictions. I do believe that Bitcoin can go somewhere between 200,000 and 500,000 in this next bull market cycle. However, nobody has a glass ball. Nobody can look into the future. Nobody can predict it. However, there's one thing that remains a fact, and that is supply and demand. Bitcoin is becoming increasingly more scarce. At the same time, the demand keeps on going up. So if you reason from first principles, then you can probably reason that the price of Bitcoin will keep going up quite a lot. So Bitcoin has gone up more than 1 million times since its launch in 2009, okay? 1,000,000x. And the halving cycle historically triggers massive price appreciation. Again, we talked about that because every Bitcoin halving triggers a supply shock. And most people focus on what it generates today. But the better question is what it could be worth in the next 2 to 3 years. So dumb money, people that want to get rich today, they only think about what is it worth today? What is it generating today? But instead, they should be thinking, what could it be worth in 2 to 3 years from now? Because again, investing isn't about getting rich tomorrow. In fact, if your whole mindset is that you want to get rich tomorrow, I don't care. We're not the right fit to work together. I don't think you should go into Bitcoin mining because mining is a serious strategy for serious investors who want to build up wealth over the long term. And wealth over the long term, meaning, you at least need to ride out the lifetime of these machines in order to maximize ROI. And the lifetime of these machines is between 4 to 6 years. Now, why do I say 2 to 3 years? Because Bitcoin moves in 4-year cycles. So every time Bitcoin goes up after a halving, you might want to take some profits. Or you may not. If you believe that Bitcoin can go up even more in the future, you might want to hold on to a little bit more of the Bitcoin. And then you want to accumulate more Bitcoin with your machines if there's still some lifetime left in your machine. And then sell it in the next bull market cycle at a higher price. So Warren Buffett has a long-term strategy. He says again, about re-emphasizing the fact that investing is a long-term strategy. It's not about making money today. It's not about speculating. It's about serious wealth building over the long term. And Warren Buffett says nobody buys a farm based on whether they think it's going to rain in the next year. But they buy a farm because they think it's a good investment over the next 10 to 20 years. Most retail investors, most average investors, they're so short-term focused. And that's why they freak out when the market goes down and they get super greedy when the market goes up because they just react to everything on the short term. But that's not how real wealth is built. The real wealth is built over the long term, and mining is a long-term strategy. So let's talk about the compounding scenario. You mine 0.1 Bitcoin per month today. This is a hypothetical example, right? So you mine 0.1 Bitcoin today at $100,000, okay? Which means that you're generating around $10,000 per month if you calculate with the price of today. But what if Bitcoin goes up to $200,000 because you wait, you accumulate Bitcoin, you've generated 0.1 Bitcoin, but the value of your Bitcoin is 2 times higher at $200,000. You have the same machine, but the value of your Bitcoin then comes out to $20,000 per month simply by holding on to your Bitcoin and letting it grow in value. That's the power of thinking long term. But what if Bitcoin goes to $500,000? You mine 0.1 Bitcoin per month. Again, same machine as the previous examples, same amount of Bitcoin, but the value of your Bitcoin is higher. It's sitting at around $50,000 per month. Your cost of production stays roughly the same because the energy price is locked in. You're working with the same machine. But the value of your Bitcoin is way higher because you let time do its thing and Bitcoin appreciate while your cost base stays the same, meaning you make a lot more profit. So why should you mine Bitcoin instead of simply buying Bitcoin on the open market? Well, whenever you're buying Bitcoin on the open market, you pay whatever the market price is at that point in time, okay? You're basically surrendering to the universe, you're surrendering to the market, you're buying at that point in time at whatever that price is. So when the price goes up and your dollar cost averaging into the market, meaning you buy into the market over time, then you pay a higher price for that Bitcoin. And this gets emotional, okay? When Bitcoin goes up, you believe, no, now Bitcoin is too expensive, I'm not gonna buy anymore. And then you miss out on really great buying opportunities. And then the market dumps and you freak out and you think like, oh no, Bitcoin is gonna go lower and lower and lower. So you tend to sit on the sidelines waiting for the market to become more secure. Bitcoin and investing in general is an emotional roller coaster, okay? It goes in cycles of euphoria and cycles of depression. And when you let your emotions get in control of you, then you'll probably invest exactly the opposite way as you should be investing. You're going to buy the tops and you're going to sell the bottoms. And this is what the typical investor does. And now you might think like, yeah, no, I'm an experienced investor, I'm not going to do this. Trust me, even when you're an experienced investor, you're going to run into walls. You're going to meet and be consumed by your emotions. Now, whenever you're mining Bitcoin, we're going to talk about one very specific, often missed benefit. But the biggest benefit of mining Bitcoin is that you're taking all of the emotions out of the equation. Your mining machines, they produce Bitcoin regardless if the market goes up or down, whether you have a good day or a bad day. You don't need to sit behind the screens timing the market. You don't need to be high on adrenaline, high on dopamine, high on whatever hormones racing through your body whenever you're making investment decisions. It is just a way more relaxed way of accumulating Bitcoin, taking your emotions out of the equation. And being more in control of your acquisition price for Bitcoin. Because if you do it the right way, you buy the right machines, you have a low electricity rate locked in for the long term, then if you do it the right way, you can very likely produce Bitcoin below its market value, meaning that you may end up with more Bitcoin for your money. Now, one often overlooked benefit of mining Bitcoin is that clean Bitcoin with no transaction history is what we call virgin Bitcoin, okay? Virgin Bitcoin. That is clean Bitcoin that comes straight from your machine to your Bitcoin wallet with no transaction history. Now, why is this a benefit? Well, in many cases, buyers pay a premium for virgin Bitcoin. So recently, in this previous cycle, we called it the institutional cycle. Many large institutions, banks, investment funds, pension funds are opening up to Bitcoin and they're buying Bitcoin with billions of dollars of capital. But they care about the origin of that Bitcoin. They want to know, does this Bitcoin have any weird history? Was it used for any illicit purposes in the past? Because then we cannot touch it because we don't want to incentivize those kind of things, whatever. So Bitcoin that's coming directly from a mining pool has no transaction history. And we're seeing a trend emerge that virgin Bitcoin, so Bitcoin with no transaction history, is actually being sold for 10 to 15% below the typical market price of Bitcoin. So it's giving you an extra incentive on top of that. And that is really nice. So I tend to believe that not every Bitcoin is worth the same. Bitcoin with a lot of transaction history, dirty Bitcoin versus Bitcoin with no transaction history, they're not the same. This Bitcoin is worth way more, and we're seeing that a lot of institutional buyers are willing to offer a premium. And now this premium is somewhere between 10 to 15%, but it may even increase a lot more over time. Let's talk about scaling your income with mining. So we know that one machine produces a certain amount of Bitcoin. Now, if you have two machines, then that amount of Bitcoin that you're earning gets multiplied. You earn 2 times the amount of Bitcoin. So if you reinvest your earnings, that's what a lot of our clients do. They start mining Bitcoin, they earn money, they take a chunk of that Bitcoin, they buy even more machines, they use a chunk of that Bitcoin to buy even more machines, and in the end they have a whole army of mining machines producing Bitcoin. Now each machine that gets added increases your daily Bitcoin production linearly, because again, if you have one machine, that machine produces a certain amount of Bitcoin. If you have two machines, those machines produce double the amount of that. If you have 3 machines, then they produce triple the amount of that, etc. So it's a really nice way to linearly grow your income. So your BTC stack sits untouched, growing in value over time. It could go double, 5 times, 10x in value, but you keep on accumulating more and more Bitcoin over time when you're mining Bitcoin. So we handle everything for you. We make sure that you don't have to be technical. You don't even have to touch a machine. we procure the machines, we ship them to our facilities, we install them, we take care of everything for you. So one of the things that I also want to address here, we touched upon it earlier on in this video as well. I believe one of the best ways to spot profitable trends before the masses catch on is to study what the smart money is doing. There's no smarter money than BlackRock. BlackRock is an asset manager that manages over $11.5 trillion of assets. BlackRock was actually one of the first companies to heavily invest in AI. They have an AI called Aladdin. Aladdin is one of the most powerful AIs that has access to all of the information on the financial markets, or a lot of the information on the financial markets. BlackRock is a large shareholder in many publicly traded companies, so they feed a lot of their data into this AI to make it even more powerful. And many governments and regulators even pay money in order to get access to BlackRock's Aladdin because it's so smart. And what is BlackRock doing with all of this knowledge and insights that they're getting from this AI? Well, they're buying into some of the largest Bitcoin mining companies on the world. They're investing more than $400 million in Bitcoin mining. So BlackRock has invested in 4 out of the 5 largest publicly traded Bitcoin mining companies. So when the smartest, most data-driven money managers in the world are buying into Bitcoin mining, the income potential is validated at the highest level. Do you agree with me? Let me know in the comments. So what makes this income model so unique? Again, mining is one of the truest passive income forms that I've ever encountered in my entire life. You have no customers, no inventory, no employees, no active time requirement. You simply have a machine, and that machine produces Bitcoin for you. These machines are in Finland, in our mining facility, but it doesn't matter because on the internet, or on the blockchain, they're processing transactions happening there, and they earn Bitcoin, and that money gets sent directly to your Bitcoin wallet of choice, regardless of where you are around the world. You don't have to physically be somewhere. You don't have to be in in Finland, in Europe. You can be wherever you want. You can be on holiday in the Maldives. You can be in the US, in Miami. You can be in Hong Kong, in Japan. These machines, they run for you. Bitcoin is an inflation hedge. There's only 21 million Bitcoin in circulation. And in a world where we can create practically anything, like more of every type of asset, like stocks, you can issue more stocks, you can build more houses, you can produce more watches, you can issue more bonds. Bitcoin, you can't create more than 21 million Bitcoin. And this is one of the only true scarce assets out there. And that's why so many investors right now are rushing into Bitcoin. And finally, Bitcoin mining is fully automated. So once you set it up, it collects Bitcoin until the end of your machine's lifetime. And it runs for you. It works for you. It's a really great strategy to put your money to work and to make more out of it. So here's realistic expectations. You earn Bitcoin. You can track everything over time as your machines generate Bitcoin. It gets sent directly to your wallet. The price of Bitcoin goes up in value. Your machines run for you without you having to do anything. And yeah, you get to track everything in real time through your dashboard. So all affect outcomes. You see, the goal is to produce Bitcoin at a cost basis below its market price. Yes, Bitcoin is volatile in the short term, meaning it can go up and down in value over time. However, if we zoom out, so when in doubt, zoom out, the long-term trajectory of Bitcoin has been consistently upward. So here's my personal approach. I mine Bitcoin, I accumulate as much Bitcoin as possible, then I let time do its thing and I let Bitcoin appreciate in value, and then the value of my Bitcoin increases. So that means that I've made more money by simply accumulating, holding on to it, and letting Bitcoin appreciate in value, and then I use a chunk of my profits in order to reinvest in more machines so that I can scale my income linearly. That is my personal strategy. Okay, that is how I've been able to build an army of Bitcoin mining machines over time. Now, how can you get started with Bitcoin mining too? Well, the first thing is to educate yourself. You've watched this video, this full course on Bitcoin mining. Everything that you need to know to get started is in this video. Now, if you want to take action and you want to get started with mining Bitcoin in the next, let's say, 7 to 10 days, then I highly recommend you to click on the link in this YouTube description, schedule a call with me or one of my team members, and then we'll walk you through everything that you need to know in order to get started with mining. We'll tell you what machines we use, we'll tell you what the potential ROI of those machines is, we'll even give you a virtual tour of our mining facility, we'll show you everything, we'll give you the chance to ask any questions that you may have, so that you can make a decision whether it is something for you or not. If it's not something for you, no problem. In that case, you'll leave the call with a lot more knowledge and insights on Bitcoin and Bitcoin mining. But if it is for you, then you may be mining Bitcoin in the next 7 to 10 days. Yeah, and you could be mining your Bitcoin, your first Bitcoin very soon. And if you enjoy, if you enjoy seeing your Bitcoin stack grow, then over time you can decide to scale your income by buying more machines. Of course, it's not an obligation, but we see that many of our clients actually buy more machines after they see the first results of their machines coming in. Now, let's talk about the following. Here, how do you actually store your Bitcoin safely? There's a couple of options out there, so exchanges and brokers like Coinbase, Crypto.com, OKX, Binance, Kraken, and a couple of others. However, if you leave your Bitcoin on a platform like that, it's actually unnecessary risk. Why? Because platforms like those can go bust. Maybe you've ever heard of FTX. FTX was one of the largest crypto exchanges, and in the previous cycle they went bust. Okay, they started using customer funds to make risky investments, and it all got very messy, and they went bust. And people that had their money on this platform lost it, or some of them even recouped it through a court case, but they had to wait many years to get it back. So I do believe that these platforms are really easy, but easy is not always the best. So a much better way is to store your Bitcoin on a hardware wallet. Again, I keep taking this wallet as an example, but this is a Ledger. The other example of a wallet on my screen here is a Trezor. And yeah, those are probably right now the best wallets that I can recommend, because these are offline wallets, meaning that you have them 100% in your custody. You are in control of all of the Bitcoin here. I can take this wallet on the plane to, let's say, Japan, and even if I have like hundreds of thousands or millions of Bitcoin on this USB stick called a Ledger, I can simply transport it in my pocket. It's really easy. I can plug it into my laptop. I can send and receive Bitcoin. It's so easy, and I can connect it directly to these mining machines. So why does this matter? So yeah, if you leave your Bitcoin on these platforms, Coinbase, Kraken, Binance, whatever, you're basically at risk. It's easy, but you're at risk, and they control it. So in crypto, we say not your keys, not your crypto. So what do we mean with keys? So this wallet and any wallet comes with a set of private keys. Private keys, you can compare it to your PIN code of your credit card or your bank card or your online banking environment. So in this case, the platform has access to your private keys, meaning that they are basically in full control of your crypto. Now, when you take your crypto on a hardware wallet like a Ledger or a Trezor, and guys, only buy from the official websites of Ledger and Trezor, okay? No resellers, only the official verified wallets, because some resellers can tamper with the hardware. They can install some kind of malware on it, and it can drain your Bitcoin. So only buy from the official platforms, okay? And once you have your wallet, you are in full control. You're basically your own bank. You're your own bank account. You're in control of the security, which is pros and cons, meaning that no central entity can force something upon you. At the same time, you need to take your security serious, okay? You need to make sure that you put it somewhere very safe. Now, one other reason why you want to keep your Bitcoin on a wallet like this is because this is the best way to store your virgin Bitcoin. So you want to be accumulating your Bitcoin on a wallet like this. You don't want to be moving it around from an exchange to another exchange, to another exchange, to another wallet, because every transaction that you're doing adds transaction history, and you want to keep as little transaction history as possible. So this keeps it clean on your own wallet, and your virgin Bitcoin over time, as the amount of virgin Bitcoins in circulation gets smaller and smaller and smaller, becomes more valuable. Currently, the premium for virgin Bitcoin is between 10 to 15% above market value. However, I believe that the premium will become even more over time if you're able to store your Bitcoin safely without adding any transaction history. Don't move your Bitcoin across multiple platforms, multiple wallets, because that will add transaction history. Okay, let's move on. So let's talk about Bitcoin's energy and the future of mining. So how much energy does Bitcoin mining use? So here's an article from 2024, and it's saying our preliminary estimates suggest that an annual electricity use from crypto mining probably represents between 0.6% and 0.23%, 2.3% of US electricity consumption. Here is another article saying that based on data from the International Energy Agency, all sectors combined, annual energy consumption comes out to be almost 25,000 terawatt hours. The crypto mining industry accounts for 200 terawatt hours, so roughly 0.8% of the global total. While this is higher than many sectors, it remains lower than industries such as data centers and aluminium production. So Bitcoin mining is actually a huge sector for the global economy growth. And here's the thing that few people understand. They think Bitcoin mining is something that is destroying the planet because it's using so much energy. But actually, Bitcoin mining is one of the greenest industries in the world. And it has a fun backstory. So in the previous cycle, I think already in the 2021 cycle, Tesla was accepting Bitcoin for payments of their car. And he did this for like around 9 months, and they accumulated quite a nice amount of Bitcoin for the company. And at one point, Elon Musk basically stopped accepting Bitcoin as payments for cars. He said, guys, I will continue accepting payments for cars in Bitcoin if the industry of Bitcoin mining reaches a level of green energy of around 60% of all energy consumed. And the Bitcoin mining industry came together. They started to figure out ways to unlock more and more cheap green energy. And right now we're actually one of the greenest industries in the world. Why? Because Bitcoin mining is always under a lot of scrutiny because of the energy consumption that we have. So there has always been a lot of pressure for us to innovate, to find really great forms of cheap green energy. Hydro, solar, nuclear, trapped gas like flaring. And yeah, as a result, we've done really, really well. So here in this article by Cambridge Studies saying the use of sustainable energy sources for Bitcoin mining has grown to 52.4% of green energy. Right now, in 2026, it's actually already a lot higher. So this industry, Bitcoin mining, is one of the most innovative in finding new green sources of energy that can be utilized. So why are miners so incentivized to find the cheapest, greenest energy possible? Well, we just discussed that. ASICs can run entirely on intermittent energy sources. They can be switched on and off. We use 100% renewable energy. So in the case of Finland, we use nuclear energy, which generates energy without burning any fossil fuels, without destroying the planet. And we even capture the heat from our machines and we provide it back to the local environment. Yeah, here you see examples. So Bitcoin mining giant buys a major wind farm in Texas. Bitcoin shift to renewable energy. Yeah, so if you compare Bitcoin mining to many other industries like exactly data centers or the banking industry, the traditional financial system, then you'll see that Bitcoin mining actually consumes way less energy and on top of that, a way higher percentage of green energy. And I'm actually quite proud of this industry and how far we've come with all of these innovations with regards to energy. And our company specifically, or our mining collective, Epic Mining, we're running on 100% cheap green energy. So what happens as the halvings continue and the block rewards shrink? Okay, because every 4 years we have these Bitcoin halving events and the amount of Bitcoin that gets released to the miners gets halved. Now people panic and they always ask me like, what will happen after all of the Bitcoins have been mined in 2021-40? Well, remember, there's two components to Bitcoin mining rewards. You've got the block rewards and you have the transaction fees. Now, the transaction fees over time become more and more and more and more and more, while the block rewards over time become less and less and less. Now, the transaction fees, because there's more adoption, more people using Bitcoin, more people owning Bitcoin, means that the transaction fees over time become more. yeah, whenever these block rewards get less, transaction fees are expected to increase. And over time, the miners who will earn the most are the ones that have the lowest cost and run the most efficient. Just like our setup in Finland called Arctic Mining, we've got some of the cheapest energy in the world. So we can still capture the largest amount of Bitcoin from both transaction fees and block rewards. And that is a long-term advantage. We've got one of the lowest energy rates in the world, meaning we can make a really good profit mining Bitcoin over the long term.
So I started with 5 computers with you in the Kazakhstan. No, in the Siberia farm. Siberia farm, correct? Yeah. And I monitored that for a year, and we brought it to a bigger amount. I think 25 at the moment. And yeah, I saw the revenues come in every week. I had about $1,000, $1,100, $1,200, depending on the value of the Bitcoin at that moment, of course.
Yeah.
And it landed automatically in my wallet on my phone. So I thought, yeah, that's a nice passive income. Checking my phone, and yeah. It looks good. And yeah, it's like a moneymaker, ka-ching, 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 all the time. the money comes in. And I thought, okay, if I can do this privately, I can also do this business-wise. And yeah, I had businesses over the last 30, 40 years, and I was selling my businesses last year, mainly to pre-pension a little bit. I'm almost 60 years old. And yeah, I thought, okay, this money I can invest in several ways. And to build a good investment portfolio, I was really thinking, I can go into gold, I can go into crypto, I can go into shares, I can go into real estate, and how am I going to formalize this portfolio for myself? Especially the mix, how many percentage of each product will I put in my portfolio? And I thought, okay, if I'm going to do this business-wise, I want to have, with all the problems in the world, a World War III coming up, you know, with the whole Ukraine shit. I can better invest a lot of that portfolio or amount of money which is available in that portfolio in Bitcoins. And then I contacted you and I said, okay, Mitchell, what about if I order a big amount of computers, let's say 200, 300 computers, and mining rigs in this case. You said, yeah, we can do that, of course, we can handle that. It's a bigger amount, of course, and yeah, we can make you a nice offer. So we got in contact about this offer, and in the end, we did the deal.
I'm 𝗗𝗶𝘀𝗰𝗹. I'm a money coach, and I'm a business coach, and I'm, of course, an investor, also in real estate.
What's your experience so far?
Yeah, very good. I have 3 miners, and I love the fact that they are doing their job, and I get that in my treasure every month. So no hassle. I only have to pay the bill every month for electricity. So very easy. And I think it's, especially for people who are not involved in the crypto world and who are thinking it's a lot of hassle, a lot of difficulties, this is easier. It's been doing every month what it's been supposed to do, and yeah, the prices are better. And when we started, we calculated if it's going and staying around 20K, then we're break even. Yeah, we're now a bit better, a lot better. So yeah, the results are great, even better than great, I think.
My name is Laurens. I am Epic Mining customer, happy customer. Currently, me and my girlfriend, my family are doing a lot of things. We're a multi-passionate family. We are investing in real estate on Bali. We're actually building a villa there. We're, of course, investing in Bitcoin. I recently became a client of Epic Mining. I was very interested after seeing Mitchell on the podcast, of course. Also been diving into Bitcoin earlier, of course. And yeah, those two just suited for me. It resonated. It's literally a money machine. It's 100% passive because Epic Mining provides everything for you. So that was my reason to become a client, because I don't have the knowledge, nor do I want the knowledge to dive into this world of mining. So because Epic Mining takes that out of my hands, I can focus on all the other business that I'm setting up. And that's, I think, great. You have to do what you're good at, what you are passionate about. And by doing that, everyone does what he or she does best, and we can all benefit from it. After I bought the machine, I dove more into Bitcoin, of course. I'm following the prices again. I did it in 2017 when I made all the mistakes that you could make. It's just been great by listening to Mitchell doing what he is good at. Epic Mining, great company, I think, good customer support, the information they provide, the dashboarding they do. The machine will last for 4 or 6 years or whatever. And then we are in another halving from today. So that's also interesting. Like, I have no idea what the price then will do and go. And it doesn't matter because the machine will just mine and I will just see what happens. But I'm very positive that my investment will have tripled, doubled, tenfold, whatever it is then.
So my name is 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗺. I work as a freelance writer and consultant, and actually my expertise is within the medicinal use of cannabis. I'm here today because I'm the very happy owner of my very first miner. And I'm here to connect with other like-minded people. I think with everything that's going on in the world, with the inflation, I need to look for alternatives. And why mining and why specifically Bitcoin mining? It's just because of the information that I had from my network, the trust that I gained. What I see and hear with Epic Mining, that they're very transparent and they're also very honest about prognosis in terms of return on investment. And they take you step to step to step in the whole process. And I saw that from a distance. And then, you know, with everything that I built up so far, last December I was able to actually purchase my very first miner. So very happy, and I want to, share that experience with other people.
A lot of the Bitcoin mining that we do with Mitchell, I see that as my retirement account. It's something that is consistently generating me Bitcoin over time. I'm not going to touch that Bitcoin. Bitcoin being the long-term hold, everything else in between being, you know, more of a cyclical. I just have a bunch of miners that are in Ethiopia. They basically, you know, mine Bitcoin for me, goes into my cold storage wallet every 10 days. I haven't checked it for ages. I've never had to worry about my Bitcoin mining machines. It doesn't matter. I just see it go in my cold wallet, and I know that Bitcoin's long-term anyway, so I don't really care about the price of Bitcoin. A lot of people ask me, it's like, well, you know, wouldn't you just buy spot Bitcoin? And I'm like, yeah, of course. That's why we have our DCA spot Bitcoin strategy. But it makes sense also to have the Bitcoin mining because we can know how much Bitcoin we're accruing over time. What I really like about you and your company is the green energy aspect, which I never thought about before. I feel like I'm helping Ethiopia now. It's profit for investors and people that want to mine, and you know, people like me that want to use Bitcoin as a retirement account, but also solving societal problems, and green energy is like just a double plus. Ever since we've partnered with Mitchell inside of our group called the Crypto Inner Circle, a lot of our clients have, been opened up to the opportunity of Bitcoin mining and what it is. And I think something that you said in the last seminar really stuck with me was that the Bitcoin mining machines are almost like your own bank. We can come in and essentially, you know, rent these miners and, Bitcoin mine in a few weeks, and we don't even have to be there, which is super awesome. So I had the misconception, like everyone, is, oh, Bitcoin mining doesn't work. It's too expensive. It's just too complicated, right? Yeah. And then when we had that conversation, I was like, oh my God, this just makes so much sense.
Okay, let's talk about risk management and realistic expectations. So again, I want to emphasize that this is not a get-rich-quick scheme, okay? So I want you to set realistic expectations, and we're going to do it together, okay? The key risk to understand are the following: the energy price, all right? Your machines are going to be using a lot of energy. And that's why it's really important that if you're going to be mining Bitcoin, that you have locked in low energy for the long term. We have done that in Finland and many of our other mining facilities. We've got access to some of the lowest electricity rates in the world. Now, each of these machines costs a couple of $1,000, okay? They also generate a lot of money. And that's why whenever I'm speaking to people about Bitcoin mining and I show them videos of our mining facilities, they always ask me like, hey, can someone steal our machines if we place them in your facility? And I get it. That was also one of my first concerns when I got into mining and when I invested a significant chunk of money in these machines. But right now we've built our mining facilities with, you know, state-of-the-art security, cameras, guards, fences. It's very heavily protected and secured. We take it very serious. So we've taken many different layers of protection, or we've built in many different layers of protection. So right now our facilities are like a mini Fort Knox. You can't simply enter the facility without any prior approval, but it's definitely something to take into consideration. What about a machine breaking down? Well, in the end, these machines are electronics, and electronics can occasionally have a defect. You know, I had an iPhone, a previous generation iPhone, and at one point the camera stopped working. Well, very simple. I went to the Apple store and it got repaired. The same thing can happen with these machines. These machines come with 1 year factory warranty. They're built to last. They're built to run with minimum maintenance. But if something still happens, then they can often be serviced on site relatively quickly and cheaply. So yeah, we've got on-site engineers that can do that. And the probability of a machine breaking down, if you ask me, is quite small, because the latest generation of machines, they're really built to last a long term. The fourth risk is the price of Bitcoin. Okay, so ultimately we are going to be mining Bitcoin. We're going to be accumulating Bitcoin, and that Bitcoin gets sent directly to your wallet of choice. Now, I believe, based on my research, that Bitcoin will probably go up a lot more in the future, okay? Because simply supply and demand, there's a lot less supply available, while at the same time the demand keeps on going up. And to me, that can only mean one thing, that Bitcoin is going to appreciate in price in the future. But that is based on my beliefs, my conviction, my research. So I'm very confident to buy a machine like this, to accumulate Bitcoin, and in the future to sell, to cash out my Bitcoin at a really nice price. However, I can't make a prediction for you. I cannot tell you what the price of Bitcoin will be in the future. Whether Bitcoin mining makes sense for you or not, all depends on whether you really believe that Bitcoin is going to go up in value in the future, okay? Because if you do, then Bitcoin mining makes a lot of sense. And then the fifth risk is the regulatory environment. So again, that is one of the reasons why we've decided to settle or build our farms in Finland and other stable jurisdictions, in order to make sure that governments can't simply, change policies from one day to the other. Finland specifically is known to be a stable, predictable environment. So how do we mitigate these risks? First of all, we're based in Finland, which is a stable jurisdiction, stable, predictable. We've locked in the energy rates for the long term, meaning that there cannot be any crazy surprise cost spikes. We've got staff on site, so security. We've got engineers, maintenance staff, who is monitoring the site 24/7. And we have a very high uptime with around 99.9%. Logistics, so we have really strong supplier relationships, so we can buy machines at the best prices. We can ship them very quickly. We've got the lowest shipping cost. We've built everything quite transparent, so every miner receives an own personal mining dashboard where you can track the performance of your machines 24/7. And we do worst case scenario planning. So what happens if Bitcoin drops 50%? Well, for us, it doesn't really matter, because we've got one of the lowest energy rates in the world. Our operation keeps working. These machines keep producing Bitcoin 24/7. You keep accumulating more and more and more. So if you believe that Bitcoin will go up in the long term, even, just like it has done in the past with all of the stuff that it has happened, the Mt. Gox ban, the China mining ban, the FTX collapse, all of these catastrophic events, yet Bitcoin still went up further and further and further, from $1 to $10 to $100 to $1,000 to $10,000 to $100,000 plus, and perhaps in the near future to $1 million plus. Okay, it might sound big, but who would have believed that Bitcoin could reach $100,000 15 years ago? Probably nobody, except for a handful, and they're probably billionaires right now because they held on to their Bitcoin and they had a really big conviction. So yeah, if you believe that Bitcoin will go up in the long term, then Bitcoin mining is definitely a strategy that you might want to consider. Now, let's talk about the next step. So why is Bitcoin mining still one of the best business models available? Well, every time someone sends Bitcoin anywhere in the world, miners get paid. Again, it comes back to the fact, or to the choice, do you want to pay the bank every time you do a transaction, or do you want to become the bank and get paid for every transaction? Because Bitcoin miners were basically the banking system of Bitcoin. We get paid for every transaction. And here is the thing about the traditional financial system. The stock market is closed in the weekends. Your bank is closed in the weekend, but Bitcoin runs 24/7, okay? And Bitcoin processes transactions 24/7, 365 days per year, no holiday, no closing time. It is always on. And as a miner, you don't need to have complicated, buying of products in China. You don't need to think about fulfillment. You don't have customers, no customer support desk. You don't have any team members that you need to manage. It is truly passive income, completely automated, okay? It works for you. It pays you Bitcoin, regardless if you sleep, eat, when you're spending time with your family or whether you're traveling. These machines, they work for you. Now we live in a society where if you go to school as a kid and your parents, they often teach you that the key to living a great life is to work hard, to save money. And yes, working hard and saving money is great, but it won't give you freedom. If you actually want to achieve more freedom in life, then the key to do that is to put your money to work, okay? You need to learn how to multiply your funds. There's 3 things that you need to learn in life. You need to learn how to make money, how to keep money, and how to multiply your money. Most people understand how to make some money, but then they spend it on stupid stuff, and then later in life they need to learn how to save money. And then ultimately they build up some nice amount of savings in their bank account, and that money then ultimately becomes worth less and less over time due to inflation. And then they need to learn how to invest that money, to multiply it, to make more out of it. Okay? And mining is an option to multiply your money. A great strategy, a great long-term strategy for serious investors that seriously want to grow their portfolio of Bitcoin. So why Finland plus Arctic mining is the right vehicle for you? So as an investor, you get access to institutional grade Bitcoin mining without any technical skills, having to do a home setup or having to fly across the world to build your own infrastructure, to borrow a lot of money, to hire team members. No, because you can leverage all of the infrastructure, all of the team members, all of the connections that we already have. And we've been doing this for more than 6 years. So I can say that we have some of the best experience, some of the best results out there in the industry. And I see this as a win-win-win-win situation, okay? A win for you as the investor because you otherwise wouldn't get access to this industry, Bitcoin mining. You wouldn't have access to such great electricity rates, to such cheap machines, to the technical know-how that we have in order to manage everything for you. It's also a win for our suppliers because our suppliers, they want to deal with large customers. If you try to approach them for buying just 1 or 10, whatever, anything between 1 or 10 or even 20 or 50 machines, they don't care. You're too small. It's too much headache for them. They want to deal with large clients that buy hundreds of machines every single month because this gives them predictable, consistent income. And as a result, we get the best possible prices. We get preferential treatment. We get the best logistics rates. It's a win for our collective because the larger the collective becomes, the lower the cost for machines, the lower the cost for electricity, the more profitable it becomes for everyone. And it's a win for the community of Finland because we supply them with heat. We heat homes, we heat hospitals, we heat schools, we heat commercial buildings. So yeah, your path as an investor, okay? You don't need any technical knowledge because we take care of everything. We know how to procure them. We know how to install them. We know how to maintain them, okay? We have built a system where you can track the performance of your machines 24/7. We will automate them directly to your Bitcoin wallet of choice. So again, doesn't matter whether the price of Bitcoin goes up or down, you earn Bitcoin. You receive real-time updates on your performance dashboard, okay? 24/7 you can track the performance of your machines. You receive daily automatic payouts directly to your Bitcoin wallet of choice, and you don't have to do anything for it. It's fully passive. So once it's set up, you earn Bitcoin until your machine's end of lifetime has arrived, all right? Which is typically between 4 to 6 years. So why the window of opportunity is now open? So we are in the pre-next halving accumulation phase, meaning that right now you can still earn double the amount of Bitcoin than after the halving. And that's why right now it's really important. Also, the price of machines are very cheap right now. I haven't seen them as cheap as this in a very long time. So if you want to get into this space at a really great time, then now is really the time to get started. So if you've been considering it, if you've watched the video all the way till this end, understand that right now is one of the most interesting windows of opportunity that I've seen in this space. Also, it is validated by the fact that BlackRock, one of the biggest wealth managers managing over $11.5 trillion worth of assets, is also now heavily going into Bitcoin mining. They've invested more than $400 million in Bitcoin mining recently. And if you believe that, these smart money managers with access to one of the best AIs to predict the markets, if they're positioning themselves in this industry, do you believe there's a lot of money to be made? My personal answer is yes, but I'm curious to hear what you're thinking. So if you do believe that Bitcoin mining could be very interesting for you and you want to learn more and you're interested to see, what machines are we currently offering, what are the potential ROI of these machines, if you want to see a virtual tour of our mining facilities, if you've got any questions, then click on the button below this video. Schedule a call with me or one of my team members, and on the call, we'll explain everything to you. We'll show you everything that you need to know. We'll provide you with all of the information so that you can make a consideration for yourself whether mining is something for you or not. Whether it's something for you or not, in any case, it will be a super valuable call. If you ask me, you've got nothing to lose. But if it is something for you, then you might already get started with mining Bitcoin in the next 7 to 10 days and earn your first Bitcoin. That is how quickly you can get started with mining Bitcoin. Even if you currently don't have any technical skills or know how this system works for you. We want to emphasize, if you schedule a call, we don't care. We don't like those calls where people apply a lot of pressure for you to make a quick decision. We don't do any of that. We don't do any exaggerated promises. We care about transparency, a professional system, and a long-term partnership. We know that our clients, on average, are very happy with our service. We've grown a lot through referrals, happy customers, sharing our service with their friends, with their family members, and as a result, we've grown very quickly, very organically, without a lot of marketing. And we know that our product, our service is our best marketing, and we want to deliver it at the highest possible standard so that if you want to get started with mining, you're also going to be very happy during the process, okay? So that being said, on behalf of the entire Epic Mining team, all of the people behind the scenes, making this possible for you, for our collective, for all of the Bitcoin miners that we work with. I'm looking forward to a long-term partnership with you if you also decide that you want to get started with mining. In any case, I want to thank you for watching this video. I hope that it was valuable. I've spent a lot of time and money into making this specific video. I hope that was useful for you. If you enjoyed watching it, make sure to smash the like button, hit subscribe so that you don't miss out on any future updates and videos. And if you still have any questions, any comments, make sure to drop them in the video. Make sure to drop them in the comments below. I will make sure to personally read all of your comments and reply to them as soon as possible. All right, peace out. Thank you for watching, and I'll see you in the next one. Take care.